Hello guys, welcome to BCCA. This is Ravi Teja, and I'm your faculty for direct access at both CMA and CA inter levels. Yes guys, as we have promised, we have already provided with exam oriented batch for all the subjects. And not only that, for my subject, I have provided you with super 35 questions as well. And the last but not the least, the most important, I have provided the MCQ compilations as well. So it is your responsibility to take the best benefit out of these three resources which we have shared from our side. Not only this guys, we will not leave you even now as well. So what we have thought is we have thought of connecting a new series which is called as War Room Preparation. So Verma sir have taken that to next level, of course with the help of the students. Now it's our time to continue this. So what we are thinking is after completion of your corporate accounting and auditing exam, I will be coming up on YouTube live at 6 p.m. to 9 p.m. I am going to cover a war room preparation with respect to my subject, that is direct access. And from then Mandeep sir will be continuing from 9 p.m. to 12 a.m. So what you have to do after completion of your corporate accounting and auditing exam, you just sit back and relax and join us on live and take the best use out of it. So all the best guys. Thank you. Bye bye.
Okay, we'll start with MCQs. So see, I have divided these MCQs into chapter wise sessions, so it is easy for us to understand. Okay, so the very first MCQ which we'll cover is, check this, we already know this MCQ. All these MCQs are asked in exam only. So I have compiled the year also behind the question, so it is easy for you to refer these questions. Okay, if you check this, most of the MCQs are taken from the direct exam only, and some of the MCQs are taken from MTPs also. So if you solve these questions, if you solve these MCQs, that is more than sufficient. So let us check the first one. The number of identities which are included in the definition of a person is how many? Option A 5, 6, 7, 8. What is the answer, Chiranjeevi? Tell me all the 7 persons. Wait. Tell me all the 7 persons. Defer tax. Defer. So check this. That number of identities are what, if you remember, we already know this. So tell me, the first one is individual, second one HUF, next one AOP or BOI, next one partnership, firm or LLP, next one cooperative society is not a person, stupid. 1 second. Partnership, firm or LLP is there. Next one company is there. After that we have local authority, and last one we are having, what is the full form of AJP? Artificial juridical person. Okay, if you count this you will get 8, but this AOP or BOI is referred as one person only. Therefore the number of identities are 1, 2, 3, 4, 5, 6, 7. So totally how many types of persons are there? Super. So the answer is 7. C is the correct answer. So now check the second one. The basic exemption limit for a resident super senior citizen above the age of 80 years is how much? 5 lakh. Is how much? 5 lakh. Super. Next one. When an individual non-resident has the total income exceeding 50 lakh rupees, the amount of surcharge payable on income tax is how much? For surcharge, there is no difference between resident and non-resident. We have studied only one rates for surcharge. So let me just check that once. We all know that if the total income is up to 50 lakh, there is no surcharge. If it is more than 50 lakh, super. But up to 1 crore, the rate of surcharge is 10%. More than 1 crore, but up to 2 crore, the rate of surcharge is 15%. Super. Next one. More than 2 crore but up to 5 crore. The rate of surcharge is, Chiranjeevi, what is the last surcharge? Last more than 5 crore. The rate of surcharge is, వాళ్ళు చెప్తే చెప్పడం కాదు, 37%. But we all know that for default tax regime, this 37% surcharge is not applicable. So for default tax regime, what is the maximum rate of surcharge? 25%. So even if your total income is more than 5 crore also, the surcharge rate is 25% in case of default tax regime. Super. For these surcharges, there is no difference between resident and non-resident. Okay. So if you check this MCQ, the rate of surcharge payable on income tax would be how much? Would be 10%. Super. So the answer is D. Next one. When the resident individual has total income of 60 lakh rupees, the rate of surcharge applicable would be how much? 10, 15, 37, 25. So the answer is simply 10%. Okay. It is more than 50 lakh but up to 1 crore. Therefore, the rate of surcharge is 10%. So it is easy. So all these are exam questions only, by the way. See, if you check this, June 2017, June 2017, December 2019, December 2021, all these are exam questions only. This much easily they can ask. So check this fifth one. Shri Ambalal has total income of how much? 350 lakhs. How much? 350 lakhs. Which means how much it is? 3 crore 50 lakh. 3 crore 50 lakh. Okay. So now read the question. It includes income from business of how much? 3 crores. Which means what? PGBP income is how much? 3 crores. And what they are saying, other than this, they are having rental income of 50 lakh rupees. Rental income is how much? 50 lakh rupees. Okay. What the question is asking, how much is the rate of surcharge applicable for the assessment year? How much is the total income? It is 350 lakhs, which means what? It is more than 2 crores but up to 5 crores. But up to 5 crores. Therefore, the rate of surcharge is how much? The rate of surcharge is 25%. Easy question. This is also simple. Next one. Sixth illustration. Foreign company surcharge. The question is asking about surcharge. So do you remember the rate of surcharge for foreign company, or have you forgotten that? Foreign company. If your total income is up to 1 crore, the rate of surcharge is nil. Important. More than 1 crore but up to 10 crore, the surcharge is 2%. Super. If it is more than 10 crore, it is 5%. Excellent. If you check the question, what they are saying, in the case of a foreign company with total income of more than 1 crore but less than 10 crores, the surcharge is how much? 2%. The surcharge is 2%. For foreign company, it is 2%. If you remember, for domestic company, it is how much? 7% and 12%. Okay. But foreign company is little bit important, so you have to refer this. The tax rate and all, we have already know that there is an amendment and we have changed that to 35% is the rate of tax for foreign company. But surcharge is how much? If the total income is up to 1 crore, then it is nil. If it is more than 1 but up to 10 crore, it is how much? 2%. If it is more than 10 crore, then it is 5%. Super. So this is fine. Next one, little bit important. So now let's solve this question. Seventh one, Sriram born on 1st April 1963. Has total income of how much? 7,50,000. Total income is how much? 7,50,000. For which assessment year they are saying? 25-26. Which means what? It is our current assessment year only. So check that. The question is saying he has opted for section 115 BAC. The question is saying the person is opting for 115 BAC, which means what they are saying? The SSC is following default tax regime. Correct or not? SSC is following default tax regime. What the question is asking, how much is his income tax liability? Always remember, if the question has asked you to calculate income tax liability, you always have to add cess. You always have to add cess. Don't forget this point. Because in last class, I think in the last exam which I have conducted, you all have calculated the tax amount correctly only, but you have forget to add the health and education cess. So that is very, very important. If the question is asking you to calculate total tax liability or income tax liability, you always have to calculate including cess. Including cess. So here the total income is how much? Tell me. 7,50,000. So let's calculate this. the total income is 7,50,000. If you check that, for optional tax regime, we have three cases. Correct or not? For optional tax regime, we have three cases. Case 2 will cover resident plus senior citizen. Correct? Case 3 will cover resident plus super senior citizen. If you check this, case 1 covers those persons which are not covered in case 2 as well as case 3. Whereas case 2 covers what? Resident, senior, citizen. Case 3 covers resident, super senior, citizen. But always remember, these three are applicable only for normal tax rates or optional tax rates. For default tax rates, we only have one tax rates. We only have one tax rates. Even if he is a non-resident, even if he is a senior citizen, even if he is a super senior citizen, we only have how many tax rates? One tax rates for non-resident. So if you remember, these are the tax rates. If your total income is up to 3 lakh, the tax rate is nil. More than 3 but up to 7 lakhs, the tax rate is 5%. More than 7 but up to 10, it is 10%. More than 10 lakh but up to 12 lakh, it is how much? 15%. More than 12 but up to 15, it is 20%. More than 15, it is how much? 30%. More than 15, it is 30%. If you check, the total income is how much? 7,50,000. So let's quickly calculate the tax liability. 1 second. Up to 3 lakh, it is how much? Nil. More than 3 but up to 7. How much income we are having? 4 lakh we are having. So 4 lakh multiplied by tax rate is how much? 5%, which means how much it is? 20,000. Next, more than 7 but up to 10. How much income we are having in this slab? 50,000 we are having. Into the tax rate is how much? So the total is 5,000. If you take the total of these two, the answer will be 25,000. 25,000. Wait. In option, they will definitely give 25,000 also. Because most of the students in hurry, they will forget to add this education cess. Okay, but you have to be very careful. Don't forget to add the health and education cess at the end. If you calculate how much is the health and education cess, 25,000 into 4%, it is how much? 1,000. So the total tax liability is 26,000. So the total tax liability is how much? 26,000, which means the correct option is D. The correct option is D.
Okay, so the next MCQ which we are going to discuss is this 8th one, which is also pretty simplest MCQ. Here they are going to test based on the income tax calculation only. So it is also very simple. If you check this, they are saying Gupta, whose age is 56, is salaried employee, has income from salary of 4 lakh rupees. They are clearly saying that the person is having salary income of 4 lakh rupees and he is having short-term cap gain from sale of listed shares. This is clearly covered in which section? STCG under section 111A. And they are saying the asset is transferred on 23rd June 2024, which means it is clearly transferred before 23rd July 2024. Therefore, the tax rate applicable is 15%. If this asset is transferred on or after 23rd July 2024, then the tax rate which is applicable is 20%. But now, since the asset is transferred before 23rd July, the tax rate which is applicable is 15%. And they are saying this STCG is 1,50,000. So now you have to calculate the tax liability, assuming the SSC is shifting out of default tax regime. The question is pretty simple. We are having both incomes. Special income also we are having, so we have to calculate tax on this special income separately, which means 1,50,000 into 15%, which means it will easily comes to 22,500. After that, other income we are having, which is balance income, I can say. It is 4 lakh rupees, but we know that first 2.5 lakh, the tax is nil. So the balance we are having 1,50,000 multiplied by 5%, which will clearly comes to 7,500. So if I add these two figures, the total comes to 30,000 rupees. But at last, I have to add one common thing, which is health and education cess, which will easily comes to 1,200. So the total tax liability is 31,200, which is nothing but the answer option number A. So this is pretty simple. Okay.
Easy question it is. Okay. So check this. Next one, important. This is also exam question asked in December 2022. So let's solve this question. This is also easy. Gupta, a salaried employee, has income from salary of how much? 4 lakh. Income from salary is how much? 4 lakh. And they are saying short-term capital gain. What is this? Short-term capital gain. From what? Sale of listed shares. Transferred on 23rd February 2025. Transferred on which date? 23rd February 2025. It is how much? 1,50,000. What they are asking you to calculate? What is the tax liability? Assuming the SSE is shifting out of default. Which means what? We have to opt for optional tax rates. Correct or not? Can you tell me what is the total income? What is the total income? Tell me. This 4 lakh rupees plus 1,50,000. Super. What is the total income? 5,50,000. But we already know this. This short-term capital gain is covered in which section? This short-term capital gain is covered in which section? Section 111A. Is it a special income or not? Have you remembered this? It is a special income. Super. So it is very simple. If our total income contains special income also, we have to bifurcate and calculate the tax liability. Correct or not? Can you tell me how much is the STCG under 111A? 1,50,000. Super. What is the balance? 4 lakh. Balance income is how much? 4 lakh rupees. Can you tell me the tax rate for this short-term capital gain under section 111A? Wait. Let us check the date of transfer. I am number of times I am saying, whenever you see a question from capital gain, you always have to check one thing. What is that? Date of transfer you have to check always. Have you remembered that date? What is the date? 23rd July 2024. If the asset is transferred before that date, we are having one treatment. If the asset is transferred on or after that date, we are having another treatment. Correct? This is what? Short-term capital gain under section 111A. If you remember, there are two dates. If it is transferred before, the rate is 15%. If it is transferred after, the rate is 20%. Have you remembered, everyone? Simple. It is transferred on or after 23rd July. Therefore, the tax rate is how much? 20%. So, can you tell me the total tax amount into 20%? It is how much? 30,000. 1,50,000 into 20%. Correct? Next one. Balance income 4 lakh we have to calculate. Up to 2,50,000. The tax rate is nil. More than 2,50,000. But up to 5 lakh. The tax rate is how much? 5%. But here how much income is covered? Only 1.5 lakh is covered, correct? So tell me, 1.5 lakh multiplied by 5%, it is how much? 1.5 lakh into 5%, how much it is? 7,500. Is it correct? 7,500. Can you tell me the total of 30,000 plus 7,500? It is 37,500. It is 37,500. But here the answer is not completed. We also have to add health and education cess. So can you tell me how much it is? 1,500. Which means the last total income is how much? 39,000. 39,000. So check the answer. 1 second. Array, before, after, okay. మనం 20 కదా వేసింది. ఒక పని చేయండి, ఒకసారి ఇక్కడ 15% ఎంత క్యాలిక్యులేట్ చేయండి రా. 15 అంటే ఎంత వచ్చింది? 22,000. ఇప్పుడు 22,500 ప్లస్ 7,500 ఎంత? 30,000. ఓకే, సో లాస్ట్ హెల్త్ అండ్ ఎడ్యుకేషన్ ఇస్ 1,500. సారీ, 1200 are they? Okay, 1200. So the answer is 31,200. డేట్ మార్చేద్దాం అయితే. Okay, so check this. A small correction in this date. It is not 23rd February 2025. It is how much? 23rd June 2024. It is how much? 23rd June 2024. See, the reason also why the mistake is happened here is, this is asked in which exam? December 2022. This is asked in which exam? December 2022. At that time, we don't have two tax rates. At that time, you are having only one tax rate, which is how much? 15% only. But current year, we are having difference. So according to the current year, I have adjusted this question. So that is the reason the answer is how much? 31,200. If you change the answer, here the tax rate is how much? 15% only. Here the tax rate is 15% only, and hence the answer comes to 22,500 plus 7,500, which means 30,000 plus the health and education cess is how much? 1,200. The total is 31,200. Okay, fine. So next one, important. Check this. This is very, very important. Eknath Private Limited engaged in which activity? Manufacturing activity. Engaged in which activity? Manufacturing activity. For the assessment year 25-26, its total income is how much? 50 lakhs. His total income is how much? 50 lakhs. It is eligible and has opted for the section 115BAA. What is the section? 115BAA. See, income is how much? 50 lakh. Income is how much? 50 lakhs. Listen. 1 second. If you want this complete clarity, we have 4 sections which you have to remember. 115BAA. Second one is 115BAB. 115BA, I will explain, don't worry. 115BAA you have to remember. BAB also you have to remember. BAD is also there, and last one 115BAE is also there. These are optional tax rates. These are what? Optional tax rates. Just give me a moment, I'll show you these tax rates. Copy this point somewhere. These are important. First, let us try to understand these tax rates, then you can copy. Always remember, if in the question they have asked you this 115BAA, directly you have to multiply your income with this rate, which is how much? 25.168%. Don't add surcharge again. Never forget to add, no need to add surcharge only, because the effective tax rate is how much? 25.168%. Sir, have you got this answer? The tax rate is 22%. The surcharge rate is 10% always. Even if your total income is less than 1 crore also, always you have to calculate this surcharge of 10%. At last, what you have to add? Health and education cess. How much it is? 4%. Simple. 22% tax. 10% surcharge, 4% health and education cess. Important section 115BAA. The total effective tax rate is how much? 25.168%. If they specifically ask you this 115BAB, the tax rate is 15%, surcharge is 10%, health and education cess is 4%, which means effective rate is how much? 17.16%. Effective rate is how much? 17.16%. 115 BAC, we already know that. That is default tax regime for individuals, etc. So 115 BAC, we already know that. Now what they are saying, 115 BAD. BAD is applicable for cooperative societies. The tax rate is same to same as that of 115 BAA, which means how much? 25.168%. If you check the last one, which is section 115 BAE, for this also the tax rate is 17.16%, which is similar to 115 BAB. You can directly write this section, this tax, section number tax. Like this, we have to remember this 4 sections: BAA, BAB, BAD and BAE. This and this tax rate are same. This one and this one also, the tax rates are same. So if you want, you can copy these 4 sections fastly, because these are important. I think even in your weekend exams also, they are asking continuously these questions. So this is easy. You can easily by heart this. You can directly multiply the tax rate with that 25.168%. You should not add surcharge again. Don't add health and education cess also again, because we have already added them. Copy fast. Copied everyone? Array, only section, only rate. Section, rate. Section, rate. Section, rate. Copy fast. Simple. Now please check the question. Which section they are asking about? 115 BAA. 115 BAA. Which means, can you tell me what is the tax rate? Just now we have checked this. Can you multiply this? What, Chiranjeevi? 4 lakh. 4 lakh. Huh? Adi 12 kaadu. It is 12. 12 kaadu. 12. So how much it is? 50 lakh into 25.168%. Okay? Simple. So next one. Check this. Ranjit has income by way of lottery winnings. How much it is? 25 lakh. How much? 25 lakh. And they are saying loss is also there under the head house property, which is how much? 1,50,000. How much is his net tax liability for the assessment year 25-26? See, 1 second. Here I just wanted to explain you one thing. If the question asked you only to calculate the tax liability without mentioning the tax regime, you will definitely opt for default tax regime, and that is correct only. Correct? Okay. But I have one doubt, because since the question is asked from December 2022, at that time, whatever is optional now, it is default then. Whatever is default then, it is optional now. So what I will do? For my safety, I will calculate tax liability under both the regimes. Which option is matching here? I will pick that option. Both options they will not give, don't worry. They will not give both optional and default also. Correct? But we already know, if nothing is mentioned, what you will calculate? You will calculate default only. My first preference I will give for default only. If default option they have not given in the exam, then I will also calculate as per optional tax rate also, because I don't want to lose marks. This is MCQ, correct or not? There is no exact right answer for MCQs. Sometimes we have to do elimination process. Okay? I hope this is clear for you, because you have already started solving MCQs from number of exams. Even though if you don't know the correct answer also, sometimes you can eliminate other wrong answers so that you can easily get the correct answer. Clear? Everyone? Okay. So check this. Lottery income is how much? 25 lakh. Loss from house property is how much? 1,50,000. So let's check this. Let's solve this question fastly. Lottery, 25 lakhs. Chiranjeevi, loss from house property is how much? 1 lakh. Super. So my total income is how much, Chiranjeevi? Total income, Bangaram. 7,50,000. 23 lakh. 23 lakh. 50. Array, idiots. We all know that casual incomes are straight away taxable in gross total income. Can you set off house property loss against casual incomes? Then why you are saying 22 lakh? Idiot. So the total income is how much? The total income is 25 lakhs. Can you calculate the tax liability for this 25 lakh? Flat 30%. Flat 30%. How Chiranjeevi it is flat 30%? ఆ ఎదవకి ఆన్సర్ తెలుసు కాబట్టి he is calculating. But we all know that this is special incomes. Correct or not? This is special income. So even in default also and even in optional also we only have one tax rate, which is how much, Chiranjeevi? 30% flat. Calculate 30% into 25 lakh. 7 lakh. High Bob. So tell me, Chiranjeevi, 25 lakh into 30%. What is the tax amount? Option is not there, 7,50,000, idiot. Plus what you have to add? Health and education cess. How much it is? 4% of what? 4% of 7,50,000. So the total tax liability is how much? 7,80,000. Super. So next one. This you already know this point. If you don't know this, please write your exam in next December or next June. Okay? Check this. Total income is rounded off to nearest multiple of 10, and total tax is also rounded off to nearest multiple of 10. I think we already know this. Chiranjeevi, have you know this? If I ask you example, you will definitely say wrong only. So I won't give example. So check this. Maximum marginal rate for the assessment year 25-26 is how much? 42.74%. Listen, someone of you are saying this for the very first time. Your faces are like that. But check this. This one. Maximum marginal rate. We have two types of maximum marginal rates. Those are not different concepts. You already know that. So let me just quickly revise. What is the highest tax rate in normal tax? Correct? Tax rate. 30%. What is the highest surcharge rate? In optional tax rate, it is 37%. What is the health and education cess? 4%. So can you add 30% plus 37% plus 4%? What is that? 42.744%. Clear? But if you are following default tax regime, what is the highest tax rate? Tax. Tax 30%. What is the highest surcharge? Super. Highest surcharge is 25%, and the total health and education is how much? 4%, which means the total under default tax regime is how much? 39. 39. If you check the answer, there is no 39%. That's what I am saying. Here they are not saying about tax regime also, which means you will automatically assume it is default tax regime, but the option is not there. You cannot write that answer is wrong. You just have to try and solve an optional tax regime also. Understanding or not? 42.74%. Clear, everyone? So last one, rebate under section 87A. What is this? Rebate under section 87A. I think we already know this point, that rebate is only applicable for resident individual. Rebate is only applicable for resident individual. So Chiranjeevi, can you please tell me, is rebate applicable for resident company? Company? So is rebate applicable for non-resident individual? Individual. Why? Residential kadra daridruda. Resident individual. So check this. What is that mistake? Pronunciation mistake. Check this. This is new point for you. You have to understand this. Everyone focus. So check this. When a member of AOP, what is the full form of AOP? Association of Persons, receives the share income, it is exempt when? Always remember this point. They have asked in which year? 2021. So at that time we have DT, which is only for 100 marks and GST is for separate 100 marks. Correct? At that time we are having this concept called AOP taxation also in your syllabus. Correct or not? Listen, what they are trying to say is, If you remember the tax rates, I said that, I mean, up to 2,50,000 nil, 2,50,000 to 5 lakh 5%, all those tax rates, if you check, those are applicable for individual, HUF, AOP, BOI, AJP. Which means what? For AOP also, those tax rates only are applicable, correct or not? For AOP also, up to 2,50,000 tax rates are only applicable. But you will learn more about this AOP taxation at final level. But what you have to remember is understand. If AOP already paid the taxes at MMR, if AOP paid the taxes at MMR, can you tell me what is the MMR? Just now we have learned. The rate is 42.744%. Listen. If AOP has already paid the tax at MMR, then it is not taxable in the hands of members. Because whatever the maximum tax rate is there, that is already paid by the AOP. Therefore, it is exempt in the hands of members. Listen, this is very, very important. But unfortunately, this is not there in your syllabus. Okay? But still, you have to remember this simple point. If AOP has already paid the taxes at maximum marginal rate, if you understand this, MMR means what? Maximum. Which means what? The AOP has already paid the taxes at maximum rate. So again, it is not taxable in the hands of members. So can you check the MCQ now? When a member of AOP receives share income, they are saying it is exempted when AOP paid the taxes at maximum marginal rates. Level a. When AOP paid the tax at MMR, then it is exempt in the hands of members. Everyone? Okay, so now check this point. When a company opt for section 115BAB, if you remember this 115BAB, you will definitely remember one tax rate, which is how much? 15% tax plus 10% surcharge plus 4% health and education cess. Effectively, it is how much? 17.168. Okay, 17.16%. Everyone? You will check for these options. But unfortunately, the option is not there. So please read the question completely. The maximum rate of depreciation. Have you remembered PGBP chapter? If you check, the maximum rate of depreciation is how much? 40%. Do you have any asset for which the depreciation is 100%? No. Do you have any asset for which the depreciation is 60%? No. So what is the maximum rate? 40%. What is the maximum rate? 40%. Understood? So we have completed all the MCQs relating to basics chapters. Okay, easy. We are spending approximately 2 minutes for each MCQ. Okay, 2 minutes for each MCQs. So next, let's move to this residential status. Very, very easy chapter. So let's quickly read this question. How many questions are there totally? 3 questions are only there from this chapter, so which will be completed easily. First one, an Indian company. Listen. You have to check for residential status of a company. You have to check for what? Residential status of a company. If you check, there are only 2 residential statuses for a company. First one, resident. Second one, non-resident. Correct or not? If you check, Indian company will always be resident. Non-resident. Indian company will always be resident. But foreign company, we have to check one thing. What is that? Super. We have to check POEM. This is company, therefore you have to check POEM. If it is another SSE, then you have to check control and management of affairs. It is company, so what you have to check? POEM. What is the full form of POEM? Place of effective management. So check this. First option. An Indian company would be resident in India, irrespective of control and management. Now read the third options. They are saying control and management. We will not check for control and management only. Correct or not? Because it is a company. So what you will check? Always it is a resident only. You cannot check. You did not check anything. So the right answer is A. Okay. So now check this 17th one. 17th one. Miss Jyoti, age 23, got married and left India to join her husband in the United Kingdom on 10/6/2024. What is the date? 10th June 2024. She had never left India earlier. What you have to check? Her residential status for the assessment year 25-26. Okay, let's quickly check whether you have remembered residential status or not. If you check how many basic conditions are there, tell me quickly. 2 basic conditions, correct? What is the first basic condition? How many days you have to stay? Chiranjeevi. నిద్రపోతున్నాడు దరిద్రుడు. ఆన్సర్ చెప్పు. హౌ మెనీ డేస్? బేసిక్ కండిషన్ 1. 182 days or more. In which year? Relevant previous year. This is basic condition 1. Second basic condition will talks about how many days you have to stay in India. 63 days anta. 60 days or more in which previous year? And 365 days or more during last 4 previous years preceding the relevant previous year. Easy point. But if you remember, there are 2 cases where you will not check second basic condition. We have exceptions. There you will not check for second basic condition. Can you tell me what is the first one? Indian citizen who is a member of crew of an Indian ship, or Indian citizen who is leaving India for the purpose of employment. There what they are saying, if you are an Indian citizen plus you are leaving India only for the purpose of employment, then you will not check basic condition 2. But if you are leaving India for other purposes, you have to check basic condition 2 also. You have to check for basic condition 2 also. In the question, please check for what purpose the SSC is moving. For marriage. Is it covered under that exception? No. Which means you have to check for both the conditions. You have to check for both the conditions. What you have to check? On which day she have moved to UK? 10th June 2024. Can you calculate how many days she have stayed in India? For April, full she stayed in India only, correct? Which means April, how many days are there? 30 days. In May, how many days are there? May. June. But 10 days only she is staying. So 30 anta. 30 April, 31 May, 10 June. So calculate how many days? 71 days, which means obviously more than 60 days. Obviously more than 60 days. See what they are saying. She had never left India earlier, which means what? Even if you calculate for last 4 years, more than 365 only she is there in India, which means what? Basic condition 2 is satisfied, which means the person is resident. Now you have to check for additional conditions. Now you have to check for. Can you tell me what is the first additional condition? Individual should be resident in how many years? Out of. Super. Out of 10 years. See, earlier she had not left India, which means all the 10 years she is a resident only, which means A1 is satisfied. Super. Can you tell me what is the A2 which is there? How many days? 730 days or more. In how many years, Rag? How many years? Same logic. But last year she did not move from India only, which means all the year she is staying in India only. Therefore it is also satisfied. Which means what? The person is a ROR. The person is a. What is the full form of ROR? ఎవడో ఒకటి చెప్తే గుంపులో గోవింద. So the option is resident and ordinary resident. Resident and ordinary resident. Super. Check this last point. I think this last point will be known to mixed batch because we have discussed this last chapter. If you remember, royalty, interest, FTS, residential status, 2 chapter we have discussed. Correct? Okay. So check this point. When Mr. Balu paid royalty to Dr. Peter of Sweden. If you check, the recipient is located in Sweden. which means he is a non-resident, which means he is a non-resident. See, like this you cannot check whether he is a resident or non-resident. How you have to check? Basic conditions you have to check. But here the information is not sufficient in the question. So since the person is staying outside India, we can assume that the person is non-resident. Okay. So check this. For use of know-how in where? India. For know-how in India. If you check this, resident is paying to non-resident, but that service is utilized in India. Therefore, what the department is saying, such income is treated as deemed to be accrued in India. Since the service is since the service is utilized in India, that is taxable in India. If you check the Indian income definition, Indian income means what? Income received in India or deemed to be received in India, or income accrued in India or deemed to be accrued in India. If it is an Indian income, then only it is taxable in India. Correct or not? So what they are saying, such income will be treated as accruing in India. Such income will be treated as accrued in India. Therefore, that is taxable for Mr. Peter. It is income for Peter, but still it is taxable in India because it is an Indian income. We all know this. Indian income is taxable for all SSEs. Okay. So check this next part. So residential status questions are completed. Now let's move to salaries. Most of the students' favorite chapter, salaries. English batch, most of the students are favorite for this salaries. Telugu batch, I cannot say that much they love this salaries. So check this. So first one, see, that much also they will not ask. Check the questions, how much they are asking. You will easily understand the level of questioning. First one, what they are saying, Manoj, a resident employee, has gross annual salary of how much? 20,60,000. What they are asking? Standard deduction they are asking. Standard deduction. So the standard deduction, assuming SSA is shifting out of default, which means it is optional. What is the standard deduction for optional tax regime? 50,000. What is the standard deduction for default? 75. See, if you check the options, there is no 75,000 only. By mistake also, you cannot keep this answer wrong. Some students are there like Chiranjeevi. They will check this standard deduction and they will remember 30%. They will forget that they have to apply that 30% on net annual value. 30% means what? Okay, 1 lakh into 30%, 30,000. So the answer is 30,000. Standard deduction, 50,000, 75,000. See, there is no option of 75,000 also. That much easily they will ask in your exams. So the answer is 50,000. So check this. Second one, even more simple. Check this question. Session so listen, a retired civil servant received monthly pension of 60,000. Monthly pension of how much? 60,000. Can you calculate the yearly income for him? Vaishnavi, calculate yearly income. You are simply nodding. Yes. Like that only you are nodding. Calculate 60,000 into 12 months. Cheira. Enta? 7 lakh. What the question is asking? Chiranjeevi, there is no answer in 7,20,000. Idiot. Check the answer. Agadi. Idhar achhe minus. Ore gorri. Why 50,000? Now you understood why I said Chiranjeevi will keep 30,000. So that is the reason. Check this. The total income is how much? Sorry, the salary gross income is how much? 7,20,000. Minus one thing you have to deduct. Standard deduction. So the answer is how much? Again I am saying, mistakenly also you will not calculate the wrong amount, because even if you deduct 75,000 there, the option is not there, which means definitely you will deduct 50,000 only. Calculation mistake. Why 50,000 and adiga? What standard deduction? Okay. So check this. This is important. Check this. I hope all of you have remembered this MCQ. So please check this. Check this. Mr. Ramji is employed in ABC Limited, who maintained a hospital for the treatment of employees. Here the hospital is maintained by employer. Are you remembering? Employer. Are you remembering something? Medical facility provided by employer to employee. If the hospital is maintained by employer, then it is fully. Then it is fully tax. Spelling exempt. In option there is no exempt. So what answer you will tell? So check this. If you read the first line only, then you will easily understand. The hospital is maintained by employer, which means the taxable value will be. Okay. So the answer is nil. Easy question. But some students are there like Chiranjeevi. They will check this 2,10,000 and he will directly remember, okay, so it is fully taxable. So the answer is 2,10,000. Second shade of Chiranjeevi. He will remember 50% of standard deduction somewhere. Income from other sources, pension is there, correct? 50% standard deduction. So he only will doubt himself. Okay, so this is not correct. So I will calculate 50%. And the answer is 1,05,000. So the second option is also there. Third shade of Chiranjeevi. He will calculate 10% of salary, 10% of salary, 10% of salary. So he will directly calculate 2,10,000 into 10%. So the answer is. But all the three are wrong. So the answer is D. So the answer is D. Okay, everyone? So check this. The last one. So not last one, still we are having. So check this. When an employee receives 18,700 from the employer by way of reimbursement of medical expenditure. This point also you already know that. Reimbursement of medical expenditure is not exempted. Which means what? It is fully. It is fully. So the amount liable for inclusion by way of perquisite is how much? Nil is not the correct answer. I know that you will see the answer and you will say the answer. So it is fully taxable. Only it is exempted when the hospital is maintained by the employer. Here the hospital is not maintained by the employer, therefore it is fully taxable. Read the question. The amount liable for inclusion by way of perquisite, which means they are asking taxable perquisite. Taxable perquisite is how much? How much, Vaishnavi, tell me? Taxable perquisite is 18,700. It is fully taxable. That's what you have to remember. Okay. So the correct answer is this one. Clear? So check this. For an employee in receipt of fixed medical allowance. Allowances, you have to only remember these three things. Fully exempt, partly exempt, fully taxable. Medical allowance, is it covered in fully exempt allowance? Is it covered in partly exempt allowance? No. So now tell me, Chiranjeevi, what is the tax treatment for this? Fully? So how much it is taxable? fully taxable. But what they are saying, the amount which is exempt, see, this is also exam question. Check this, they have not given any amount in the question. They have not given any amount in the question, which means any student with common sense clearly knows that these three are not correct options. There is no amount in the question. So how can you keep 12,000, 15,000 or 18,000? But some students are there. He will think that, okay, the standard deduction is 15,000 rupees. So this 15,000 will be exempted. Some students will think like that. But we all know that the answer is how much? Nil. The answer is nil. Next one, important. Your favorite question is there. Ganesh, 45 years, employed in Moses Limited, has received children education allowance. Children education allowance of how much? 2,000 rupees per month. Can you calculate how much he have received? 2,000 multiplied by 12, which means how much? Do you remember anything relating to this? Education allowance, how much is exempted? 100 per month, but maximum 100 per month, but maximum. So can you please tell me 2 children into 100 per month into 12 months? So the total amount is how, Chiranjeevi? 1200 anta. 1200 anta. నువ్వు చెప్పకుండా నాకు వినిపిస్తుందా? నీదో పెద్ద స్వీట్ వాయిస్ అన్న కల్లోకి కూడా రావడానికి. సో చెక్ దిస్, వాడు రావాలి. వాడు 21,600. 21,600. Everyone understanding or not? Easy question. Salary. So check this. Sweat equity shares. Sweat equity shares. What is this? Sweat equity shares. Have you remembered the sweat equity shares? I'll give an example, you will easily understand. Sweat equity shares means shares which are given to employees. Shares which are given to employees for concessional rate. For what rate? Concessional rate. Chiranjeevi, what is the meaning of concessional rate? What's the answer, Japak, please? Fair market value equals to 110 rupees. But they are asking employee to only pay 50 rupees. They are asking employee to only pay how much? 50 rupees. How much is the benefit received by the employee? 60 rupees. Correct or not? How much is the benefit received by employee? So this entire 60 rupees is taxable under income from salaries. I think you remember this point. This 60 rupees is the benefit which is received by him. Okay. So this is taxable in the hands of employee. Okay. So check the option. Fair market value subject to standard deduction of 50,000. I know Chiranjeevi will keep this only. Fair market value of such, ఏదో సోది ఇచ్చాడు. Second point is also not correct. So third point, నేనేం అనకుండా ఎందుకు షుగర్తో రెచ్చిపోతావు? నువ్వు పెద్ద. So third point, fair market value of such share on the date when such option is exercised as reduced by the amount paid, which means what? Fair market value minus amount paid by the employee. That is taxable in the hands of employee. Employer in the tax pay chestadra? Employee. Okay, easy point. So last one, Miss Mala is employed in X Co Limited. She wants interest. ఇంకోటి లేపేసాను ఏంటి? ఓకే లేపేసా చూడండి. 26th, when employer contributes to approved superannuation fund. Approved superannuation fund. Listen. If you remember, this approved superannuation fund you will read with RPF, PPF. Somewhere you will read. If you remember at least this, you can easily remember the answer. Check this, how it is applicable. This is employer contribution. Employee contribution is allowed as deduction. Employee contribution is allowed as deduction. That is correct only. But this is what? Employer contribution. This point we have covered in salaries chapter. Employer, if he contributes anything to superannuation fund in excess of 1,50,000, that is taxable under the head salary. Even if you don't know any of the option, still you will keep 1,50,000 only. But some extraordinary students will keep other answers. I don't comment upon them. 1 lakh is not the correct answer. You never read any exemption or deduction up to 1 lakh is exempted. Long-term capital gain is different. But in salaries chapter, you did not read this point. 50,000 also in most of the cases we have not covered. 50,000 we have covered in gift. But that is not related to superannuation fund. What is there? 20,000 also we have not covered anywhere. Okay. If you check the salaries chapter, we have already covered this point. In excess of 1,50,000, employer contribution is taxable in the hands of employee. Okay. Everyone. So the last point from salaries, if you check this, Miss Mala is employed in Exco Limited. She wants interest-free loan from the employer to meet some personal expenses. Personal expenses. If you remember, if employer given any loan to employee, if employer given any loan to employee, assume the interest he is charging is only 6%. But if he takes loan from the bank, the interest which the bank will charge is 11%. He is charging less interest only because he is an employee. Therefore, what we have understood, this difference is taxable in the hands of employee. Correct? But this is not applicable if the loans and advances are very small. Very small. What is the small advance means? 20,000. 20,000. What is the small advance means? 20,000. Okay. 20,000. So if you check this, the answer is 20,000. Okay. The next topic is capital gains. Capital gains. This is also favorite chapter for both the batches, even English also and mixed batch also. This is very favorite chapter. Easy questions they will ask. So check this. First one, shares in unlisted companies. Shares in unlisted companies will be treated as long term if they are held for a minimum period of. See, we know two categories of assets. Sorry, three categories. Category A, category B, category C. For category A, what is the period of holding? For category B? For category C? But if the asset is transferred on or after, then it is super. Can you tell me what are the assets which are covered in category A? Listed equity shares, listed shares. Next, units of equity oriented mutual fund. Third one, units of మీరు 112 చెప్పేస్తున్నారా, జీరో కూపన్ బాండ్స్ అది మిక్స్ చేసేస్తున్నారు. నేను అప్పుడే చెప్పా 4 ఉంటాయి. సో చూడండి, ఈ 4 అసెట్స్కి ద పీరియడ్ ఆఫ్ హోల్డింగ్ ఈజ్ హౌ మచ్? 12 months. Second category, shares other than covered in category A. Simply you can remember unlisted shares. For unlisted shares, the period of holding is 24 months. Other than unlisted shares, they will cover another asset also. Immovable property. Immovable property. So for these two assets, the period of holding is super, which means the period of holding is 24 months is the right answer. Okay. Again, they have asked same question. When the shares are held in unlisted company, they will be treated as long term when the holding period exceeds 24 months. When the holding period exceeds 24 months. This is even more simpler. If you check the options, without reading the question only, you will select the option. Don't read the question, just read the options and tell me what is the correct answer. 1/4/2001. There is no provision where you have read 1/4/2003, 1/4/1994, 1/4/1984. This much easy they will ask in your exam. You, even if you don't read the question also, still you will solve the answer. I am not asking you don't read the question. Sometimes even if you don't read the question also, you can still solve the question is what I am trying to say. Okay. సింపుల్గా చెప్పా, ఆకలేస్తే బయటికి వస్తామని, అయినా వింటాడు, క్లాస్ ఇండు. సో చెక్ దిస్. వెన్ ద క్యాపిటల్ అసెట్ ఈజ్ అక్వైర్డ్ ఆన్ 1/7/1981, ఈజ్ ఇట్ అక్వైర్డ్ బిఫోర్ 1/4/2001? Yes. So the cost of acquisition will be original cost or fair market value as on 1/4/2001, whichever is higher. If stamp duty value is also available, you have to take Stamp duty value or fair market value, whichever is lower, and that should be compared with cost of acquisition, and whichever is higher will be your cost of acquisition. Super. This we have already covered in capital gains. That much also they are not asking. Check what they are asking. You have to take fair market value on which date they are asking. You have to take fair market value on which date. It is 1/4/2001. 1/4/2001. So quickly check the next part. While computing the capital gains, an eligible SSE, even Kavya, check in the, is allowed to opt for market value as on 1/4/2001. See, this point I have explained later. After completion of all the important capital gains, I have explained you for intangible assets. For intangible assets, there are two kinds of intangible assets. If those are self-generated, then the cost will be nil. If they are purchased from others, the cost will be purchase cost. But if the asset is acquired before 1/4/2001 also, don't take the fair market value. That is only applicable for intangible assets. So if you read the point, you will easily understand. This point we have already discussed. You have already written also. If you have notes, you can check the last pages of capital gains. We have written this topic. Okay. For intangible assets, you should not take the fair market value as on 1/4/2001. Super. So next part. An undertaking was owned and operated for 28 months. Slump sale. Super. 28 months before it was sold on a slump sale basis. Land and building also form part of its assets. The resultant gain would be what they are asking. So check this. The period of holding is how much? 24 months. If you remember, if the asset is transferred on or after 23rd July, for category C, the period of holding is only 24 months. But for slump sale, it is still, but for slump sale, it is still 36 months only. But for other assets, 24 months only you have to check. Correct? This is slump sale, which means 24 months is not there. It is 36 months you have to check. So since the asset is transferred 28 months only, it is less than 36. So the asset is short-term capital asset. So the asset is what? Short-term capital asset. Which means if you transfer the short-term capital asset, what you will get? Short-term capital gain. Everyone understood this or not? Easy point. Okay. So last point. Not last. We still have. It's okay. Just 10 points are there. If a land is situated within aerial distance of 7 kilometers, 7 kilometers from municipal limits to be regarded as a capital asset, the population of the municipality, so and so. If you remember, rural agricultural land, urban agricultural land, have you remember? Okay. If the population is more than 10,000 but up to 1 lakh, then surrounding 2 kilometers. If the population is more than 1 lakh but up to 10 lakh, then surrounding 6 kilometers. If the population is more than 10 lakhs, then the surrounding 8 kilometers will be treated as agricultural land only. So if you check this, they are saying 7 kilometers, which means what? More than 10. More than 10 means up to 8 kilometers. So the answer is 10 lakhs. So the answer is 10 lakhs. This 9 lakh is straight away eliminated from the question. There is no 9 lakhs in that point. Correct or not? Everyone? Everyone. So check this. This point, 34. This is little bit important, so please check this. This is also asked in June 2019, which is old syllabus. Which is old syllabus. Still this section is there in the capital gains chapter, but this is not that much important. So what I did is, I think for English batch, after completion of all the capital gains concepts, I have explained this. 45 subsection 3 I have explained. But for you, I will explain that now. It is very, very simple. I think you all have completed partnership accounts chapter. Just now only you have written the exam. Okay, so now it is very, very simple for you. There is one partner. There is one partner and there is one partnership firm. Partner is having one asset. Partner is having one capital asset. What the partner is doing? The partner is transferring the asset to partnership firm. Partner is transferred the asset to whom? Partnership firm as capital contribution. As what? Capital contribution. Can you tell me the journal entry for this capital contribution? I think it is there in your syllabus. But still, that is not important for us. For me, I don't need that entry, but you have to do because you have all just now you have written the exam also. So from capital gain perspective, what you have to understood is it is a capital asset. It is transferred also. It is a capital asset. It is transferred also. So what will be coming? Capital gain will be coming. What will be coming? Capital gain will arise in the hands of partner. In the hands of partner. If capital gain will come, what is the first step which you will write in the capital gain computation? The first step will be full value of consideration, which means what? The first step, full value of consideration, will be amount recorded in the books of the partnership firm. In the books of the partnership firm, which means what? You will pass a journal entry in the partnership firm books. The entry will be asset account data to partners capital account, because of which the capital balance is increased for partner, therefore capital account will be credited, and obviously the firm will be getting asset, so it will be debited. So the entry is asset account data to partners capital. Sir, what will be taxable as full value of consideration? Amount recorded in the books of the partnership firm. If you remember this much, it is more than sufficient. Okay, no need to go deep into this section. So that is the reason why I did not explain also. If you check this is the question they have asked in June 2019, 6 years back. At that time, this provision is very, very useful for you. But now they are not testing that much, but still you know that partnership firm. If you see something related to tax, you always have to remember amount recorded in the books of the firm. Amount recorded in the books of the firm. Everyone understood? Easy point. Okay.
Okay, so next one, MCQ number 35. Here also the question is pretty simple. Mr. Giansh have sold his capital asset on 16th July 2024 and the tax payable on long-term capital gain is 1,25,000, and they are asking us to calculate what will be the advance tax payable on 15th September 2024. The question is pretty simple. If you look at the advance tax, we are having totally 4 installments. The first installment is due on 15th of June. By that, you have to pay 15% of your total advance tax, total tax liability. And the second installment is due on 15th September. By this date, you have to pay 45%. And the third installment is due on 15th December. By this date, you have to pay 75% of the tax. And by 15th March, you have to pay 100% of total tax as advance tax. The question is asking you to calculate the tax payable on 15th September, which means they are asking you to calculate this second installment. So we already know this 45% of this 1,25,000, which is nothing but 56,250. So option D is the correct answer, not option A. Correct? Yes. So
when Mr. Avinash earned long-term capital gain of how much? 1,80,000 on what? Sale of listed shares. On which date? 23rd July 2024. On which date? June 2024. Is it before or after? So what is the tax rate if you remember? 112A. 10% in excess of 1 lakh. 10% in excess of 1 lakh. What the question is asking you to calculate the amount of income tax on the long-term capital gain only they are asking. They are not asking you to calculate the income tax on total amount. They are asking you only to calculate the tax on capital gain. So now please tell me the capital gain amount. 80,000 multiplied by, because in excess of 1 lakh only you have to take. How much is in excess of 1 lakh? 80,000. So tell me 80,000 into 10%. But they are asking amount of income tax including cess plus 4%. 8,320. 8,320. Easy question. See, you have to check what the question is asking. Whether the question is asking you to calculate the total tax liability or they are asking you to calculate only the tax liability on capital gain, that you have to check. Here what they are asking, capital gain. Here they are asking only to calculate the tax on capital gain. So that is the reason why we have computed only capital gain only. Understood or not everyone? Easy point. From this there is no calculation. Directly you can answer. Exemption under section 54. Have you remembered this exemption under section 54? What is this? You have one residential house property which you have transferred, and what you have purchased, another residential house property. Another residential house property. This is applicable only for individual or HUF. If you remember, how many properties I can purchase? One only you can purchase. But if long-term capital gain is up to 2 crores, then you can purchase 2 residential house properties. Can you purchase outside India also? Only in India. So next 3 options are done. It is only applicable for individual as well as HUF. Next point, to avail exemption, an individual should purchase a new residential house within, they are asking time period. If it is purchase 1 year before or 2 years after. If it is construction, 3 years after. Okay. But here they are saying within from the date of sale, which means they are not asking before, which means it is after. After means how much? 2 years. Easy point. Next one. The lock-in period for National Highways Authority. This is given in section 54 EC. If you check, you will easily remember it is 5 years. It is 5 years. So next one. Short-term capital gain on sale of listed shares. If you read this, this is nothing but section 111A. Date is what? 15th June 2024, which means it is before 23rd July 2024. So what is the tax rate? What is the tax rate? 15%. Simple. Last 2 points. First one, long-term capital gain arising from transfer of unlisted securities in the hands of non-resident or foreign company. If you check this, in basics I have explained tax rates, and then I have explained case 2 and case 3 also. Don't worry, I will show this. Check this. Long-term capital gains. 1 second. Check this. Case 2 and case 3. Case 2, case 3. Case 2 is applicable for non-resident or foreign company, whereas this is also applicable for listed securities or zero coupon bonds. Okay, you can easily read these points, you will easily understand. Even if you check the options directly also, 30%, 40% are not the correct answers because they are asking for non-resident, and this is special income. Special income. So we only have 2 options. If you check this, non-resident or foreign company, the only rate which is applicable is how much? 10%. For this you have to check this basics tax rates. Okay, so fine. After this, the last one is also same. Without availing the benefit of indexation, we have 2 options if you remember. 20% with indexation or 10% without indexation, whichever is lower. Whichever is lower. This is only applicable for case 3, which is listed securities or zero coupon bonds. If you check this, so the answer is of a listed company without the indexation, it is 10%. It is 10%. Okay. Income from other sources. This we have already know this point. First one, which of the following is not an income taxable as income from other sources? Read the option first one. Family pension, it is taxable in income from other sources. The question is asking which is not an income under income from other sources. Director sitting fee is also taxable under income from other sources. So first two are eliminated directly. Read the third option. Rent received from house property including use of plant and machinery, which means this is composite letting of building. Composite letting of building, which means what? Along with building you are also letting furniture and plant and machinery also. It is separable between rent for house property and use of plant and machinery, which means what? You are collecting separate rent for house property, separate rent for plant and machinery. That rent relating to house property will be taxable in income from house property. Related to machinery, you have to check whether it is the business or not. If it is business, PGBP. Otherwise, other sources. The last point, if you check that the rent is inseparable. If the rent is inseparable, there are high chances that the income is taxable under either PGBP or income from other sources. But if you check this, since the rent is clearly separable, it is very clear that some amount is not taxable in income from other sources. So the answer is option C. The option is C. So check this. Gift of money amounting to 2 lakh rupees. 2 lakh rupees cash gift. 2 lakh rupees cash gift is given to non-resident. Is given to non-resident and he is a non-relative. Did I explain this gift at the time of explaining this gift? Did I explain that it is only taxable for resident? No. Cash gift in excess of 50,000 rupees is taxable for all persons. Who will pay the taxes? Is it the recipient or is the giver will pay the tax? Recipient will pay the taxes. Here the recipient is whom? Non-resident. So obviously what is the answer? Fully taxable. It is not in excess of 50,000. If it is in excess of, if the gift is in excess of 50,000, entire gift is taxable. It is not the amount in excess of 50,000 taxable. It is the entire gift which is taxable. Okay. So that is fine. Next one. I think you will answer this question easily. So check this. On the occasion of his birthday. Mr. Sanjay received cash gift from his relatives of how much? 60,000. And from his friends, 1,10,000. How much is taxable? 1,10,000. From relatives, whenever you have received, that is not taxable. Don't combine those 2 points. At the time also I have said, if you received from relative, whenever you have received, that is fully exempted. Everyone? If you received on your marriage, even though if you receive from not your relative also, that is still exempted. That is still exempted. So super. The answer is 1,10,000. Last one. Mr. Hari, resident in India, received 11 lakhs rupees by way of dividend. By way of dividend. Dividend is not a special income. Dividend is taxable at normal tax rates. Dividend is taxable at normal tax rates, which means what? Up to nil. More than 2.5. Those tax rates are called as normal tax rates. This question they have asked from December 2017. At that time, dividend is taxable at special rates, which is 10%. But now, dividend is a normal income only. So, you have to remember, dividend is a normal income and it is taxable at normal rates or regular rates. Okay. Only 3 points. So, check this. Mr. Seshu received a loan of how much? 2 lakhs. From which? Session Trading Private Limited. You have to remember that thing. What is that thing? Deemed dividend. One private company is there. That private company is giving a loan to equity shareholder who is having 10% or more voting power. Then whatever the loan which the shareholder is receiving, that is taxable in the hands of. That is taxable under deemed dividend. That is taxable under deemed dividend. So now check this. The accumulated profit of the company is 10 lakh rupees. The amount of tax. Okay, they are asking the tax. That's what I am saying. Dividend is not taxable under special rates. So, which means what? You have to check the other income. Which means you have to calculate slab rates. This 10% is wrong, 20% is wrong, 30% is also wrong. You have to calculate slab rates. For slab rates, you have to understand his total income. Correct or not? You have to add the other incomes also and then you have to calculate the tax liability. Okay. Check these 2 points, simple points. An award of 1 lakh rupees was announced for tracing a missing person. One person is missing. If you see somewhere in the road or somewhere, they will see missing posters which are sticked outside. If any person have found that person, they will give a gift of 1 lakh or 2 lakh. Like that, they have announced one award or reward. One person have find that person and he have received the reward. It is taxable under which head you have to understand. It is not taxable under salaries, no house property, no PGBP, no capital gain. So it is taxable under income from other sources. Check the options. We did not check this provision earlier. So up to 50,000, fully exempt, that kind of information we don't have. So it is fully taxable. It is not a casual income also. Casual incomes means what? Lotteries, bettings, gamblings, all those incomes are casual incomes. So this is not a casual income only, which means it is fully taxable. Check the last one. Dr. Ram Seshan received 1 lakh rupees as Lifetime Achiever Award for rendering medical services from a social club. Simple. This point also we have not checked in anywhere. So it is not covered in any exemption. So straight away it is taxable fully. Everyone understood or not? Easy points. Okay. So with this, so the next chapter which will start is PGBP. So let's quickly, we have some 10 to 15 MCQs in this. All are very simple MCQs only. So let's check this fastly. So the first one, expenditure incurred by the businessman for ready to use software. It is what? Ready to use software. If you remember, if you check the rate of depreciation, if you remember, for computers including computer software, the rate of depreciation is how much? 40%. Super. But here, since the asset is already ready to use software, here you will not get depreciation. Entire amount will be treated as revenue expenditure only. This is judgment from one of the case laws. So you have to apply this. If the software is ready to use basis, then you will not get depreciation because 100% that will be allowed as a revenue expenditure. This is new MCQ for you. So you have to understand this. 100% will be allowed as revenue expenditure. Okay, easy MCQ. So now check the next one. For an SSE engaged in manufacturing activity. I already said this number of times. If in the question they have given this manufacturing activity, you have to understand you will get additional depreciation. Super. Here they have clearly asked also. Additional depreciation for second hand machinery is how much? 6 lakh. But this is installed on 12th May 2024. Is it before 3rd October 2024? Yes. Yes, it is before 3rd October only. If you check, additional depreciation is allowed on new plant and machinery. Additional depreciation is allowed only on new plant and machinery. Which means what? For second hand plant and machinery, there is no additional depreciation. Some students will calculate 6 lakh multiplied by, since it is additional depreciation, they will calculate 20%. Correct or not? They will calculate 20%. The asset is what? Ready to put to use before 3rd October only. Therefore, full depreciation you will get. Which means how much depreciation you will get here? 1,20,000. But the option is not there. So students, what they will do? They will multiply into 50% also. So the answer is how much? 60,000. But you know that for second hand plant and machinery, there is no additional depreciation. Understood? So the right answer is how much? Nil. So next one. Ramesh T Limited acquired a motor car for how much? 6,20,000 on 30th August 2024. So check this. The company is engaged in manufacturing of tea in India. It is motor car. If you remember the rate of depreciation for motor car, if the motor car is used for hiring purposes, then it is 30%. Normal motor cars, the depreciation is how much? 15%. So the cost is how much? 6,20,000. The asset is put to use before 3rd October only. Therefore, how much depreciation you will get? Full depreciation you will get. Since this is motor car, the rate of depreciation is 15%. So please calculate and tell me. 93,000. 93,000. So the right answer is option A. Okay. Simple MCQs. Next one. R acquired an asset for how much? 5,22,000. 5,22,000. What they are saying, which includes 72,000 rupees as GST. 72,000 rupees as GST, for which R has claimed input tax credit. I have already explained this point. If, see, two benefits are there. If you want, you take depreciation, or if you want, you can take ITC. If you have already taken ITC as per GST, again it will not be included in your cost of acquisition. Again it will not be included in your cost of acquisition. If you don't understand what I am trying to say, please check this point. While writing actual cost of asset acquired, we have written this point. Check this. If GST amount is included in invoice, if the person have already claimed the ITC as per GST, then you will not get depreciation. If the person do not take an ITC, then you can take depreciation. Which means what? If the person have already taken ITC, which means he have already taken one benefit. So again, depreciation will not be allowed to such person. Therefore, what you have to do, whatever the question which they have given, it includes 72,000 as GST, but it should not be included in the cost. So can you tell me 5,22,000 minus 72,000? It is how much? The question is not asking you to calculate depreciation. The question is asking you to calculate actual cost of asset, actual cost of acquisition. So the answer is 4,50,000. 4,50,000. Easy question. So check this. This is also super easy question. Mr. Nitin bought a laptop for 50,000 rupees on 1/4/2022 for his personal use. He bought earlier for personal purpose. Now what happened? He started using this laptop for his business purpose. Earlier he purchased it for personal purpose, but now he transferred that to business purposes. If you remember, if you purchase building for personal purpose, later if you use that for office purpose or business purpose, then you will get notional depreciation. You will get what? Notional depreciation. But that is only applicable for building. But that is only applicable for building. Here it is not the building. Therefore, you will not get the notional depreciation. So, what is the cost of asset? 50,000. You have purchased in 1/4/2022, but from that time you will not get the depreciation. You will get the depreciation only when the asset is used for the business. Only when the asset is used for the business. If you check here what they are saying, 2/5/2024, which means what? For 24/25. They are asking for 24/25 only. You know that for computer or laptop, the rate of depreciation is how much? 40%. So can you calculate 50,000 into 40%? 50,000 into 40%, which means 20,000. Everyone understood this point or not? If the question is having laptop building instead of laptop, then you have to calculate depreciation for 22-23 also and 23-24 also, and you have to deduct that amount from the actual cost. We have already seen this example in PGBP, correct or not? If you purchase building, then you will get notional depreciation, but other than building you will not get notional depreciation. Depreciation will be allowed only when the asset is used for business purpose. Easy MCQ. So the next one, this also we have already know this point. See, listen to this very carefully, then you will understand. Where a part of the block of asset is sold. They are saying only part of the block of asset is sold. Which means what? There is some part. Which means there is another part. Which means at least one asset is there. At least one asset is there. So check this. Sale price is less than opening WDV plus cost of assets. They have sold the asset, but that amount is less than the opening cost plus additions, which means what? They are having some value also. They are having one asset also, plus they are having some value also, which means will you calculate depreciation or will you calculate short-term capital loss? You will calculate depreciation because there is one asset plus there is value also. So you will not calculate short-term capital loss. You have to calculate depreciation. If you don't understand what I am saying, simply you can take one example. Simply you can take one example. You will easily understand this. So check this, what I am trying to say. Even if you don't understand this point, you can easily take one example. What you have to take, where they are saying the part of the block is sold for a price less than the opening WDV plus cost of assets. Simple. Please take the following example. Any example you can take. You have some opening WDV. Write it as 10 lakh rupees plus additions you have. Take any example. Take the additions as 2 lakh rupees, which means the total is how much? 12 lakh. The total is 12 lakh. Now what they are saying? You have sold for a price. That price is less than the opening WDV plus additions, which means what? Here I will write sale price. I want to write only 10 lakh rupees. The balance amount is how much? 2 lakh. Now what you have to check, whether you have any asset in the block or not. They are saying only part of the block is sold, which means what? There is another part. So you will not get short-term capital loss. You will get depreciation. You will get depreciation. So super. Now check this. The options. First one, terminal depreciation. Terminal depreciation, if you remember, this is applicable for power generating units. Lastly, I have explained terminal depreciation or balancing charge. That is not here. That is only applicable for power generating units only. Here they did not mention anything about power generation or manufacturing. So it is not applicable. Second point, none of the given options. Let's check the last one, short-term capital loss. But all the assets are not transferred. Therefore, you will not get short-term capital loss. So the answer is what? WDV for the purpose of charging current year depreciation. Have you understood this point? Which means what? You have to calculate depreciation on this 2 lakh rupees. Easy MCQs. Till now, PGBP, no MCQ is different. You are able to recollect all the things which we have studied. Correct? Telugu batch have completed it very recently, but English batch have taken some time. So it may not be possible for you to revise. But if you revise once, all these MCQs are very, very simple MCQs. Okay? Nothing conceptual they are asking. If you check till now, whatever the MCQs we have discussed, everything is related to depreciation only. Everything is related to depreciation and additional depreciation only. So it is very, very important. You should not skip PGBP. That too, you should not skip this depreciation or additional depreciation. Easy concept. So last one. This also you have already know this. While reading the options only, you will easily understand this. Try to check whether you have remembered this or not. Which of the following expenditure on scientific research? Scientific research. Do you remember the section number for this scientific research? Super. 35. AD kadra 35. Only 35. 35 AD is for specified business. So 35 they will say about scientific research. Even without looking the options, let us check how much we have remembered this 35. Revenue expense will be allowed as deduction. Capital expense also will be allowed as deduction. But even if you incur before also, even if you incur after also, you will be giving deduction. If you incur before, a maximum 3 years you will be allowed as deduction. Correct or not? For any revenue expenses, if you remember, only salary will be allowed as deduction, excluding perquisites and materials. Super. Other expenses will not be allowed as deduction. See, this much points we have to know. Check what they have given in the question. First one. Capital expenditure incurred on scientific research during the year related to the business. That is allowed as deduction. Capital expenditure will be allowed as deduction. Revenue expense incurred during the previous year. That is also allowed as deduction. Revenue expenses on payment of salary to employees and purchase of material. That is also allowed as deduction. So the last point, land. Capital expenditure excluding land. Excluding land, everything will be allowed as deduction. So if you check the question, what they are saying, which is not allowed as deduction, they are asking. So the answer is option D. So the answer is option D. Easy MCQs. Till now, nothing conceptual they have asked. You just have to remember and you have to reciprocate the same. Easy MCQs they are asking. This point, maybe you have forgotten this, but still this is important. Preliminary expenses. Last day I have revised it. Miscellaneous sections. Preliminary expenses. This is given in section 35D. You may not remember this section, but even if you check the options also, you will easily remember. Once you complete the PGBP revision, you will remember this. So the right answer is, if any preliminary expense is amortized under the Income Tax Act, 5% will be allowed as deduction. If you revise once, you will easily understand this point. So how much is allowed as deduction? 5% of preliminary expenses. Preliminary expenses will be allowed as deduction. Easy point. Okay. This you may not be remembering because you did not revise it PGBP, but still this we have covered. So next part. This easily you can say. I am expecting more than half of the students to say this correctly. See. When tax is not deducted at source at an annual rent of 2 lakh rupees. I have paid 2 lakh rupees. I have paid how much? 2 lakh rupees. Paid to landlord by a company. I have paid 2 lakh rupees to whom? To landlord. Which means what? To owner I have paid rental income. On which TDS should be deducted. On which TDS should be deducted. But what they are saying? Tax is not deducted. But what they are saying? Tax is not deducted. Okay. But what they are saying? The amount liable for disallowance under section 40A subsection 1A. If you remember, if I am paying to some other person on which TDS is deductible, but I did not deducted the TDS, then how much is disallowed? 100% will be disallowed if the payment is made to non-resident. But if the payment is made to resident, how much is disallowed? 30% is disallowed. Here the question, they are not saying anything about non-resident. So you will not assume the person is a non-resident. Therefore the person is a resident, and hence the amount of disallowance is how much? 2 lakh multiplied by 30%, which means 60,000. Which means how much it is? 60,000. Super. So the next one. This is also important. You will definitely remember this point. So check this. Alok and Co. is engaged in trade of garments. What they are saying? Total interest. What they are saying? Total interest on term loan taken from SBI. Which means what this is? Interest paid to banks. Interest paid to banks. Okay. Due for the previous year is how much? 5,20,000 rupees. Which means what? This is the total interest which you have to pay. How much you have to pay? 5,20,000 rupees. You have to remember one section, that is very simple. Section 43B. Some expenses are allowed as deduction, but only on payment basis. But only on payment basis. If you remember, it is tire payments. These are tire payments. T for taxes, cess, duty, or any other amount. I for interest. I for interest paid to banks. E for employee related payments. R for railways. R for railways. Super. Simple. If you remember the due date also, if you want deduction, you have to make the payment up to the due date of filing of return of income. If you make the payment up to the due date of filing of return of income, then only that expenditure will be allowed as deduction. If you make the payment after the due date, then you will not get the deduction. Then you will get the deduction in next year, which means in the year of payment you will get. Easy point. So check the question. How much is the total interest due? 5,20,000. But it paid 2,50,000 towards interest up to 31st March 2025. Which means what? In 24-25 only they have paid. Is it allowed as deduction? Yes. Before the due date only now. So next one. Out of the balance amount, 1,10,000 was paid before the due date. They have clearly given. 1,10,000 was paid before the due date. So will this also allowed as deduction? Yes. So how much is allowed? 2,50,000 is also allowed. 1,10,000 is also allowed. Remaining amount was outstanding after the due date, which means that will not be allowed as deduction. Check the question what they are asking. How much of interest is deductible for the assessment year? 25-26. Can you tell me the amount? 2,50,000 plus 1,10,000, which means how much it is? 3,60,000. Super. Again I am saying till now they did not ask it, not even a single technical question. If you just revise PGBP once or twice, you can easily answer these questions. Okay. Students who are feeling it difficult, the reason is they have listened to PGBP long ago. Since you have not revised, you may feel little bit difficulty. But trust me, if you check the notes, if you revise once again, then all these MCQs are very easier. Okay. Fine. Next part. Where the gross receipts of profession exceed dash, it is eligible for audit under section 44AB. This is nothing but tax audit. If you are doing business, if your turnover exceeds 1 crore, then you have to get your books of accounts audited. But if you are a profession, the limit is how much? 50 lakhs. If your gross receipts exceed 50 lakh, you have to maintain your books of accounts and get them audited. If you remember one point also, for business, that 1 crore will become 10 crores if two conditions are satisfied. Cash receipts are up to 5% of total receipts and cash payments are up to 5% of total payments. Easy points. Okay. Section 44AB. Once again, I am saying those students who are facing a difficulty, the reason is you have not revised. That's it. Every point I have covered. Okay, even if you check the notes also, I'll give you this PDF, don't worry. If you check later after revising PGBP, you would be able to solve each and every MCQ without any failure. Okay, easy MCQs. Okay, so check this. Last one. This is even more easier. So check this. Dr. Rao is a famous physician at Chennai. His gross receipts from the profession is how much? 48,40,000. He wants to admit income under the applicable presumptive provision. Presumptive provision. They are saying he is a famous physician, which means what? He is a professional. He is a professional. If you remember, for the presumptive taxation for professional is how much? Is covered in which section? 44 ADA. If you remember. Okay. 50% of his gross receipts will be treated as business income. 50% of his gross receipts will be treated as business income. Check how much they have given. 48,40,000. Just multiply that with 50%. You will get 24,20,000. So the right answer is 24,20,000. Easy question. Once again, I am saying if you refer just PGBP once, you would be able to solve each and every MCQ. Majority of the MCQs they will ask from depreciation. Other than that, they will focus on tax audit and presumptive taxation. These points only they will ask in exam. Even if you check these points, easy 4 to 6 marks you will get, because they will definitely ask minimum 2 MCQs, maximum 2 MCQs. Sorry, minimum 2, maximum 3. I am saying without question, one mandatory question will be there, 7 marks. Other than 7 marks, they may ask 2 MCQs or 3 MCQs. 13 marks out of 50 is definitely a big deal. I think you know that DT is only for 50 marks. Out of which 13 marks they will ask only from PGBP. So students who miss this PGBP completely are stupids according to me. You have to solve, what should I say? You have to solve smartly without taking PGBP as complete choice. Just stick to those sections which I mark them as important. Okay, I think last class I have already marked them as important. But even if I do not discuss them in class, I have already explained the same in Super 35. In Marathon also I have explained. In all the classes I have explained the important sections from this PGBP chapter. So don't skip PGBP. If you skip, out of 50, 13 marks are gone. You will not even attempt only if you skip. Trust me. But if you know something, you will definitely attempt. Something is better than nothing. Okay? Fine. Next part. This is also super easy. So check this. Interest on capital of a loan from partner of a firm is allowed as deduction under section 40 clause B. You already know this point. The maximum amount of interest paid by the partnership firm to the partner is how much? 12%. How much? 12% per annum, or the rate mentioned in the partnership deed. See, that is maximum 12%. Can you pay more than that amount? No. If you pay more than that amount, you will get only 12%. If you pay less than that amount, you will get only lesser amount. So the answer is 12% or rate mentioned in the partnership deed, whichever is less. Whichever is less. Easy point. If you check that point, you will definitely remember this. Easy MCQs from PGBP. So the last one. This also you already know this point. As per the Income Tax Act, in case of loss, a partnership firm may claim deduction in respect of remuneration paid to the partner to the extent of book profits. If you remember this book profits, you will easily answer this. You have to divide your book profits into first 6 lakhs and balance 6 lakh. For first 6 lakh, 3 lakh or 90% of book profits, whichever is higher, you have to take. Whichever is higher. Check the options. This is little bit trickier. Check the first one. 3 lakh or 90% of book profit, whichever is lower. Check the second one. 3 lakh or actual remuneration, whichever is higher. Last one. 3 lakh or 90%, whichever is higher. Those who didn't read this concept, they will try to prepare their own income tax act. So they will remember 3 lakh rupees. And they will not remember this book profit. So they will think, okay, I have paid 3,50,000 rupees, but maximum is only 3 lakh. Maximum is only 3 lakh. So whichever is lower means what? 3 lakh will be allowed as deduction. Like this you will calculate. But you should not take actual remuneration. You have to take 90% of book profit. You have to take 90% of book profit. And whichever is higher will become your maximum remuneration. In case of loss, your book profit will be negative. Correct or not? Your book profit will be negative. So obviously, even if you calculate 90% of book profits, that will be negative only. So the maximum amount will be how much? 3 lakh. So the maximum amount will be 3 lakh. In case of losses, this point also I think we have written in our book. In case of losses, the maximum remuneration allowed to the partnership firm is how much? 3 lakhs. How much? 3 lakhs. Super. So the next one, income from house property. Another easy chapter. They may not ask in every attempt this income from house property, but maybe some 2 attempts, maybe some 1 after 2 attempts, they are asking one question related to house property. If they ask from house property, that should be a bonus MCQ. You should not miss that MCQ. Even a person with no common sense also will answer this correctly. Let's check how it is possible. First one, check this. Exam question, June 2017. Exam question, what is this? Deduction available under section 24A is how much of NAV? 30%, 50%, 15%, 70%. So the answer is 30%. Even the persons who are attending CAT batch also, they don't know anything about house property. Still, even if I ask, they will say that income from house property, standard deduction at the rate 30%. Correct? Simple. Even a person with no common sense also will answer this correctly. But let me explain you this point also. Maximum CA students or CMA students will lose common sense sometimes. Even if the question is 2 into 2, they will check in calculator and confirm. To that level, they will do sometimes. So what you have to remember, I know that there is something called as interest on enhanced compensation. 50% will be allowed as standard deduction in other sources. So definitely some students will remember that point and they will keep this 50%. Okay, but our students will not do that because it is house property question. Our students are pro at house property, so they will not make this silly mistakes. Correct, Chiranjeevi? So what is the right answer? 30% of what? Your monthly salary, yeah? Of what? Of what? NAV means? Net annual value. See. Now check this 65th question. 65th, easiest question. We have solved some n number of problems to understand this pre-construction period. But now check this. Pani, what happened? Fever? Navinavi chachipotunda. సిగ్గు లేకుండా క్లాస్లో అవుతుందిలే విను. సో చెక్ దిస్. రామ్ నిన్నేమనకపోయినా ఈడికే బాధ అని ఏదో సౌండ్ చేశాడు. నువ్వు కాదా? ఆ ముష్టి గొంతు నీదే. సో చెక్ దిస్. వాట్ హ్యాపెండ్? ఆడేవాడు ఆడు క్యూట్గా ఉంటాడు. ఆడు కాసాయి అంటారా? అందరికంటే క్యూట్ అంటే ఓన్లీ సూర్య. ఓకే, సో చెక్ దిస్ క్వశ్చన్. దిస్ ఈజ్ వెరీ ఈజీ. ఇఫ్ యూ మేక్ అయితే వెళ్ళి ఆ డోర్ సరిగ్గా పడిందో లేదో చూడు ఒకసారి. సో చెక్ దిస్. Listen, important MCQ, but very, very easiest MCQ. Nandan, you only have to say the answer. Check this. అది ఎవరు నవ్వర్రా? బాగా నవ్వర్రా. నీ ముష్టి నవ్వుని ఇమిటేట్ చేశాడు, అది కూడా అర్థం కాలేదు తెంగనోడికి. సరే, చెక్ దిస్. రామ్ commenced construction of residential building on which date? 1/4/2018. 1/4/2008. Even if you don't remember any concept, still you can solve this question. So first let us summarize what they have given in the question. What they are saying in the question: construction started on which date, Chiranjeevi? ఎవరికి కావాలి, ఎవరికి అక్కర్లేదు. On 1/4/2018. Super. నువ్వు చెప్పినా తప్పే, చెప్పకపోయినా తప్పే. Interest on housing loan up to 31st March 2024. They have given this interest. Interest up to 31st March 2024. Okay, I will write what they have given. That's it. Interest up to 31st March 2024. How much it is? 4,40,000. How much it is? 4,40,000. Okay. Now what they are saying? Interest for the period from 1/4/2024 to 30th September 2024, which means in 24-25 previous year only. I will write what they have given. That's it. 1st April 2024 to 30th September 2024. They have given this period interest. How much they have given? Super. How much? 60,000. Excellent. 60,000. Next, what they have given? From 1/10/24 to 31st March 25. That is also related to 24-25 only, but only to make you confused, they have given it separately. Next, what they have given? 1/10/2024 to 31st March 2025. How much it is? 50,000. Super. What is the question which they are asking? Quickly check that. How much is the interest eligible for deduction under section 24 for the assessment year 25-26? You have to calculate for current year. So check this. Even if a person with no common sense will understand why they have given interest till 31st March 2024. That is nothing but pre-construction interest. Even if you don't calculate the pre-construction period also, still you will understand this point. How much is the pre-construction interest? 4,40,000. Have you remembered the treatment of pre-construction period interest? What is that? 5 equal installments. Can you calculate 4,40,000 by 5? 88,000. Easy point. This entire amount is relating to post-construction. Entire amount is relating to post-construction. So that is fully allowed as. So can you calculate the total and tell me? 1,98,000. This is the answer. But listen, most of the students will make the mistake this one. They will include this also in pre-construction period interest. The reason is also pretty simple. If you check the date. 30th September 24 is the date of completion of construction. But from that date, you will not count the post-construction. If you remember, take the first day of that previous year in which construction is completed, and you have to take the last day of the before previous year pre-construction period. Okay, so the right answer is 1,98,000. Some students will include this 60,000 also in pre-construction period, but that is not correct. Understanding or not? Pre-construction period interest, easy point. Okay, if you think more, then only you will add this 60,000 in pre-construction. If you just do normally, you will easily get the correct answer. Sigguleni gaadida re inne nipadleda, then you will easily get the correct answer. So what is the correct answer, Chiranjeevi? 1,98,000. Have you got this answer? Do calculation and tell me fast. Have you got 88,000? If you by heart like this, nothing you will get, because these questions, these numbers, they will change in the exam. Okay, easy point. So next one, Till how many questions we have? 1, 2, 3, 4. Only 4 questions. Sugar patient, this is there. So like this, Mr. A let out a what should I say? I cannot say about this question. Just you only read the question and try to understand. Mr. A let out the property for monthly rent of 30,000 during the year, which means per year how much it is? 3,60,000. Next one, municipal tax of how much? 60,000. In December 2024 for the financial years 23-24 and 24-25. Last year municipal tax also I have paid in the current year only. Current year municipal tax also I have paid in the current year only. And 25-26 also they have paid, which means it is advance municipal tax. How much it is? 20,000. That will not be allowed as deduction. Municipal taxes, if you have paid that from previous years, that is allowed as deduction, but advance municipal taxes will not be allowed as deduction in the year of payment. That will be allowed as deduction in the year in which it is liable, but it will not be allowed in the year of payment. Easy point. You already know the gross annual value. How much it is? 3,60,000 minus municipal taxes. How much you will take? How much? Sachinoda, 60,000 only you have to take. This 20,000 is advance municipal taxes. So only you will take 60,000, which means your net annual value will be how much, Chiranjeevi? 3 lakhs anta. 3 lakhs, na? Okay. But question what they are asking, how much is the income under the house property? So the right answer is standard deduction also you have to do. What the question is asking, income from house property they are asking. So standard deduction at the rate 30%, which means 90,000. If you deduct that 90,000, you will easily get the 2,10,000. Some students, intelligent students, will calculate this municipal taxes point correctly. They will apply their minds and they will calculate municipal taxes correctly. And the moment they say it is 3 lakh rupees, they will keep this answer. But you have to check what the question is asking, Sairam. Okay. The question is asking you to calculate income under the head house property, which means after deductions you have to calculate. Easy question. So next one. This also I cannot explain, that much easy it is. So please check this. Mr. Lakshman occupied his apartment till December 2024. December 2024. From April 2024 to December 2024, the property is self-occupied. The property is self-occupied. And thereafter occupied the quarters provided by the employer. Now the apartment is vacant. So what this person did? The apartment of the Lakshman was let out at 20,000 rupees per month from 1st January. If you check this, the property is partly let out and partly self-occupied. Not area-wise, time-wise. Not area-wise, time-wise. If you remember, what is the GAV? Tell me. Expected rent for the entire period or actual rent for the let out period. Whichever is higher. Whichever is higher, you have to take. Easy point. Have you remembered this? Easy point. The question, there is no information related to expected rent. So what you will take? Actual rent you will take. For how many months you will take? 3 months only you will take. So what is the GAV? 20,000 into 3 months. If they have given any information related to expected rent, you will calculate that also. So 20,000 into 3 months. The period for which the property is let out, it will start from 1st January 2025 to 31st March 2025, which means how many months? 3 months. Easy question. Once again, easy question. From these MCQs only, one MCQ will come in your exam. Sorry, not one. All 5 MCQs will come from your exam only. From these MCQs only, it will be coming in your exam. Okay, so now pay more attention. This one. Which of the following is not a case of deemed ownership of house property? First of all, is deemed owner concept is there in our syllabus or not? Deemed owner, it is there. Have I explained? Have I explained? Really? Have you remembered? Have you remembered? So now tell me the answer. First one, transfer to a spouse for inadequate consideration. If you remember at least the examples which I have discussed at the time, Chiranjeevi and his wife got separated. They got divorced. For you, I think Surya example I have taken. So check this. If Chiranjeevi have transferred any property to his spouse for adequate consideration, if he transferred, then deemed owner concept is not applied. But he have transferred for inadequate consideration, which means what? The property value is 100 crore, but Chiranjeevi have transferred only for 1 rupee or 100 rupees. In that case, the income from such house property will be taxable in the hands of transferor because he is only the deemed owner. Easy point. Next one. Transfer to a minor child for inadequate consideration. The same point I have explained. If you have any minor child, if you have transferred to your minor child, this provision only will be applicable, which means the person is called as deemed owner. The person is called as deemed owner. Co-owner is not deemed owner. Co-owner, I think you have solved one problem also. Raman Shama, question name. Raman Sham, illustration 14. Ila batti batti sara. Super. Shankar, yes, Shankar. What happened, Nandan? So this co-owner is not the deemed owner. Co-owner is not the deemed owner. See, how students will make mistake is, they know this point, they know this point. They know both the points. Co-owner, this is also owner, this is also owner. Which means this is also correct only. The question is saying not a case, therefore the person will keep none of the above. Easy point, easy mistake. Easy 2 marks, gone. This is how students will make calculations and they will think that they will get 80 marks in taxes, both DT and IDT put together. They will get 80, but not in single attempt. In 2 attempts, they will get 80. Okay? 2 attempts means this attempt, next attempt. They will get 80 for sure, but not in single attempt. Okay, Chiranjeevi? All the best. You will get, provided if you solve these MCQs and super 35 questions. Just where you kept the center, Hyderabad only. Even if you watch the super 35 now, and if you went there, and if you write also, you will easily get 80 marks. 80 marks. Okay? Or writing up to the chapter. So next one. This is a little bit interesting question. So you have to answer this. Question number 69. But very, very important. Okay? This is highly conceptual question according to me. If you don't see this question, you will easily make a mistake. So check this very carefully. R gifted his house property to his married minor daughter. I have one house property, not me. Chiranjeevi has one house property. He have gifted to his minor daughter. But he is stupid. He already made marriage to his minor daughter also, which is not correct. But still, if you remember deemed owner concept, if the property is transferred to minor daughter for inadequate consideration, then the transferor only will be treated as deemed owner. But exception is there. If the minor daughter is already married, then it is not treated as deemed owner. Then it is not treated as deemed owner. So people may think in that case that income is taxable in the hands of minor daughter only. But if you remember clubbing provisions, clubbing, even though your daughter is married, if she is a minor, clubbing provisions will be attracted. Clubbing provisions will be attracted. So now you have to tell me, R as deemed owner is totally wrong because this is covered clearly in exception. So this point is wrong. Obviously, since she is minor, that will not be included in her total income also. So this is also not correct. But first one, R, however, it will be first computed as minor daughter's income and then clubbed in the hands of Mr. R. This point may seem logical to you, but kindly check the first option also. It will be first computed as minor daughter's income and clubbed in the income of the parent whose income is higher. This is also correct. This is also correct. But which is more correct? A is more correct. You have to club in the hands of those parent whose income is higher. Whose income is higher. But this point is also correct only. But you have to select which option is most correct. Which option is more correct? You have to select that option. Okay. Easy questions from income from house property. Okay. So the next one, return of income. Take this. So the next chapter, set off and carry forward. Set off and carry forward. Easy MCQs, but still most of the students will make mistakes. First one, Mr. A is having loss from regular business of how much? 8 lakhs. Loss from normal business, regular business, means it is how much? 8 lakhs. Income from speculation business is how much? 11 lakhs. Speculation business income he is having, from normal business he is having loss. So can it be set off or not? Easily it can be set off. How much is the loss? 8 lakhs. Loss. From regular business it is 8 lakh. Profit is how much? 11 lakhs. So the net income is how much? 3 lakh. Okay. So the total income is how much? 3 lakh rupees. Which means what? Normal business losses can be set off against speculative business income, but speculative business losses cannot be set off against normal business income. Easy point. Next one, even more easier. When the SSE is having loss from house property, the maximum amount of such loss for set off against other incomes would be 2 lakh rupees. Even if you don't know the options also, still you will keep the correct answer. The 1,50,000 is not at all correct. Students who kept this 1,50,000, they will not clear CMA only. Who kept this no limit? Who kept this no limit? That is also ultra legends only, correct. But this one, 30,000. 30,000 chance is there, because 30,000 or 2 lakh, some people may confuse, but that is interest. This is set off. This is set off. Next one. So the answer is 2 lakh rupees. So next, a business loss can be carried forward and set off in the subsequent assessment year. Business losses, can those be carried forward for how many years? 8 assessment years. Are there any exceptions? Speculative business loss, how much? Specified business loss, 4 kaadu. Specified business loss, unlimited years. Unabsorbed depreciation, casual losses, casual losses lapsed. They cannot be set off against casual incomes also. So the question is, they can be set off, but what they are saying, in the year in which you got the profit, in that year the business itself is not there, but still you can set off. That loss. So simple point, the answer is continued or not. Okay. Assume in previous year 2019-20, SSE got some loss. He have carried forward that loss. Now we are living in 24-25 previous year. During this year, the business is not there, but still he can carry forward and set off such loss. Easy point. Okay. So set off also is completed. After that, the most important chapter 6A, deductions. The most important chapter 6A, deductions. So quickly check the question. Amount received at the time of closure or opting out of the national pension scheme referred to in section 80 CCD of the Income Tax Act due to the death of the SSE is exempt up to how much of the total amount payable for the assessment year 25-26. So is it 40% or 60%? 40% or 60%? 40% is taxable, but the option is not there. So you have to read the question once again. Amount received by the nominee. 60%, 40% I have explained. After that, next point also I have explained. If the SSE is death, if the SSE is died, then whatever the amount his nominee is getting, 100% exempted. So the answer is not 40%. So the answer is 100%. Understood? If the SSE is died, then whatever the amount his nominee is receiving, that is 100% exempted. Even if you remember the 60% exemption also, that is not covered here. But some people will definitely keep 40%. If I was in your position, I will definitely keep 40%. Because I will remember 60-40. I will not remember exempt or taxable. But you should not do that. 60% is exempted. Which means how much is taxable? 40% is only taxable. But here, since it is received by nominee, entire amount is exempted. Okay, easy question. Next one. When the amount is withdrawn from the NPS, I have already checked this point also. If you have 10 crores in your NPS account, if you withdraw up to 25% of that amount, then nothing is taxable, which means what? Fully exempted. So check the point. They are asking for how much if you withdraw. It is chargeable to the extent the withdrawal exceeds the contribution. If it exceeds 25%, then it is taxable. So the answer is 25%. So the answer is 25%. Easy questions they will ask from 6A deductions. All you have to do is you just have to check this limits. So next one, even more easy. Medical insurance premium. This is covered in which section? 80D. What is the normal amount of deduction? 25,000. But if the SSE or his parents is senior citizens, 50,000. So read the question. Medical insurance premium for senior citizen. How much? 50,000. How much? 50,000. So 30,000 is not the answer. 1 lakh is not the answer. 60,000 is also not the answer. Like that only they can give. Even if you don't know anything from the options, you can easily calculate the answers. Easy MCQs. So next one. This also I have explained, I think, but let us check whether you have remembered this point or not. Mr. Atul. Mr. Atul, a resident Indian. Who is he? Atul means it is Hindi name. Okay, Atul. A resident Indian paid for himself through account pay check, which means what? Other than cash. Other than cash. ADD. Other than cash only you have to pay. Other than cash only you have to pay. How much he have paid? 2,10,000. But this is not for 1 year. This is for how many years? 5 years. So the the deduction is allowed only for proportionate amount only. 2,10,000 divided by 5. So how much it is? 40. But if you check, he is a resident senior citizen. So maximum 50,000 he will get the deduction. Maximum 50,000. But that is not flat deduction. So maximum is 50. But for him the amount is only 42,000. So he will get the 42,000 rupees only as deduction. Easy point. Okay. Next one. Mr. Hari Vallabh. Rule 11DD. This is related to 80DDB. If you check, you will understand. 80DDB. Deep disabled dependent and cheppa kada. If they have incurred any expense, if he is a normal citizen, maximum 40,000. If he is a senior citizen, maximum 1 lakh rupees. Easy point. 60,000 is wrong, 80,000 is wrong. So students will get only 40,000 or 1 lakh. So the answer is 1 lakh rupees because he is a father is a senior citizen. Everyone understood this point or not? Easy point. Next one. Madhav is a resident individual. His father is wholly dependent on him. Dependent disabled. Dependent disabled. So which section? Do you remember the amount of deduction? Flat. Flat deduction. 75,000 in case of normal disability. Severe disability, 1,25,000. Have you remembered the meaning of normal disability? More than 40% but up to 80%. If it is more than 80%, severe disability. So check what they have given in the question. 90% disability, which means it is a severe disability. So the amount of deduction is how much? 1,25,000. This much easily they will give the answers. If you check till now, they have only covered 80D series, DD series, DDB series and 80C. If you check C, CCD, CCE, some 5 sections we have studied. So next one, this is only I am talking about. You don't know anything. Just check the answers. Check whether you will understand the answer or not. Check directly the options. 1 lakh, 2 lakh, 1 lakh 50,000. Most of the deductions in 6A deductions are 1 lakh 50,000. But we also know the section number also. 80 CCE. CCE will say 3 deductions will put together. The deduction is 1 lakh 50,000. Those who have solved this 6A deductions, they will easily understand this sections. Okay. That's it. Super. So next one. Interest on housing loan. Interest on housing loan. This is also simple. The principal amount of housing loan that you have to remember. Interest on housing loan. Under house property also you will get. But this is additional amount which you will get. So the answer is 1,50,000. So the answer is how much? 1,50,000. 50,000. So check this. There is another section which is 80EEA. That is also interest on residential house property. But for that the limit is how much? 1,50,000. But this is not 80EEA. This is 80EE. Therefore the maximum amount of deduction is how much? 50,000. So 1,50,000 is wrong. Okay, easy points. Once again I am saying very easy. So check this. This also, even without seeing the options, you can easily understand. 80G donations. Have we covered this or not? 80G donations. If you pay up to 2,000 in cash, that is allowed as deduction. But if you are paying more than 2,000 in cash, that is not allowed as deduction. So the answer is 2,000. Easy points. 80 RRB. Royalty on patents. 80 QQB. Royalty on books. Royalty on books. Author ante book. Book author kadara. Okay. Easy. Next one. When a resident senior citizen having gross total income of how much? 5,56,000. Who is he? Senior citizen plus resident. Listen. He is receiving interest from savings account. Are you remembering any section? 80TT. A is for normal citizen, but he is a senior citizen plus resident. So 80TT. B. Normally interest on savings account you will get 80TTA. But if he is a senior citizen you will get 80TTB. Do you remember the limit of deduction? How much? 50,000. How much it is? 50,000. How much he have received? 8,200 plus fixed deposit 47,000. The interest which he received is how much? 55,200. But the maximum amount of deduction is only 50,000. Therefore the answer is 50,000. Therefore the answer is 50,000. Easy points. Okay. So this one, these we did not cover. So you have to understand from now. Okay. Check this. Easy sections, but these are very much lengthier in our board books. If you check, there are many deductions like 80, IA, IAB, IAC. Like this, they have some series of 5 to 6 deductions. But you simply remember this one. If in exam, if you see any section relating to 80 IA, 80 IA, 80 IA like that, if you see any of this point, always remember you will get deduction for 3 assessment years. You will get deduction for how many assessment years? 3 assessment years. I did not explain this concept in our book. So now I am explaining, try to understand. Deduction is allowable for how many years? 3 assessment years. If you want deduction, the condition is very simple. You have to file your return of income within the time limit. If you want deduction, you will get the deduction. But the condition is you have to file the return of income within the time limit. If the time limit is expired, then you will not get the deduction. Simple point. What is the due date? 31st October in case of cap, 31st July in case of normal persons. Okay, super. If you want the deduction, you have to file the return of income up to the due date. Next point. 100% of profits will be exempted. 100% of profits will be exempted. The correct thing you have to say is 100% of profits will be allowed as deduction. 100% of profits will be allowed as deduction. For how many years you will get the deduction? 3 assessment years. If you want the deduction, you have to file the return of income up to the due date. Next one. These are available for startup companies. These are available for startup companies. Chiranjeevi, do you know the meaning of startups? What? Newly started companies, but you have to obtain one certificate from ministers. Ministers, because for startups there are many exemptions and many deductions. If you want to claim those deductions, you have to get that certificate. Okay, so all those provisions are not that much important from inter level. Even in final level also they will not ask. They will only give MCQs. What you have to remember, this is applicable for how many assessment years? 3 assessment years. What is the amount of deduction? 100% of the profits. 100% of the profits. If you want deduction, what you have to do? Return of income should be filed up to the due date of filing. And last one, if you want this deduction, your turnover should be up to 100 crores. Your turnover should be up to 100 crores, which means what? If your turnover is more than 100 crores, you are not eligible for this deduction. Okay, now check the options. First one, a startup can claim the deduction for how many assessment years? 3 years. Easy points. Next one, Padmaja Power Company Private Limited. It is a company. It is a company. So what is the due date? Cap 31st October. 31st October. So check the options. 31st October is the option. So next one, check the 2 points. Which of the following are correct? First one, what they are saying, 100% deduction will be given. Is it correct or not? Yes. Second one, what they are saying, up to 25 crores. But the answer is 100 crores. But the answer is 100 crores. So please remember this point, which means what? Only first one is true. Second one is not the true. So the answer is 1. So the answer is 1. Okay. Easy point. So next one, TDS TCS is not there for you. Clubbing of income, is it there or not there? Clubbing is also not there. Agriculture income, not there. Okay, so now come to this point. Additional MCQs framed by the author. These are not exam questions. These are tricky questions. These are definitely tricky questions. If you don't know, you will definitely answer this. Sorry, you cannot answer these questions. Okay, little bit difficult, but not impossible. Okay, so check the first one. Calculate the amount of exempt HRA of Mr. Vishnu from Bangalore. What the question is asking you to calculate? Exempt HRA. Exempt HRA. Check this. They are asking exempt HRA. He is staying in Bangalore. First of all, have you remembered the exemption of HRA? How much? Tell me. Actual HRA received, or 40% or 50% of salary, or rent paid minus 10% of salary. Here it is Bangalore. So he will get 50%. Only 40%. 50% is only applicable for metro cities. And Bangalore is not a metro city. So how much deduction? How much? Okay. So actual HRA is how much? Have they given? 60,000 rupees he have received. So actual HRA received is how much? 60,000 or 40% of salary. Do you remember the definition of salary as per HRA? What is that? Basic plus DA in terms plus commission as a percentage of. Simple. Can you tell me the basic in the question? Have they given DA forming part? How much? Have they given any commission also? How much? Calculate 7% of 8,60,000. Can you add the total? 40% only you have to take. Can you calculate 40%? 2,55,000. Or rent paid minus 10% of salary. First of all, what is the rent paid? Check. Question rent paid ఏంటి? In addition, he is getting 48,000 as DA forming part, 7% on commission. Sale amount was 8,60,000 and 60,000 as HRA. Super. So let us take rent paid equals to. ఒక్క నిమిషం. రెంట్ పెయిడ్ ఈక్వల్స్ టు, లెట్ us take 50,000. Rent paid is how much? 50,000. Can you tell me rent paid minus 10% of salary? 2 minutes. 10% of salary is how much? 58,820. But rent paid is how much? 50,000. So minus, it will come negative amount. It will come negative. So the answer is 0. Whichever is lower will be nil. Miss Priya received following amounts from the employer. Calculate the taxable value of those. Medical insurance premium, how much it is? 12,000. Life insurance premium, how much? Accident insurance premium, how much? If you remember, we have already written in the notes that if you check at last, I have written some fully exempt perquisites which you have to remember. Some fully exempt perquisites which you have to remember. In those, medical insurance premium is there, accident insurance premium is also there. Which means what? This is exempted, this is also exempted. The question is asking what to calculate? Taxable value, which means what is taxable? Life insurance premium is taxable. So the right answer is 15,000. So the right answer is 15,000. Easy point. Easy point. Okay. Again I am saying this is also adjustment from one of the questions. This is also not my own question. There is one question, last question from salaries chapter, additional questions, last additional question. They have this adjustment which is there. Okay, next one. See, this is duplication, so you can ignore this question. Minor married daughter question. Clubbing provisions, just now we have completed. Check the next one. Mr. Hari has taken a house on rent and sublets the same to Mr. Ram. First of all, Mr. Hari is not the owner of the property. He have taken the property on rent from some other person. But now the Hari is giving the property as rent to whom? Mr. Ram. Subletting. So the income which is received by Mr. Hari from Mr. Ram is taxable under the head income from house property. No. It is taxable in income from other sources. Why it is taxable under income from other sources? He is not the owner. So the answer is income from other sources. So the answer is what? Income from other sources. Now from these questions, I did not give answers intentionally only. Because if I give the answers, I know how you calculate and say. So now tell me, your true potential will come. Miss Sam transferred her Mercedes Benz, which she recently purchased for 50 lakh rupees. 6 months back she have purchased. For now she is selling for 38 lakh rupees. See, cost is how much? 50 lakh. Okay. Sale value is how much? 38 lakh. Cost is how much? 50 lakh. Sale value is 38 lakh. Calculate the amount of capital gain liable to be taxed in the hands of Miss Sam. First one, is it capital loss or capital gain? Capital loss. Me bonda. That is a car which is personal movable property. If you check the definition of capital asset excludes first item, stock in trade. Second one, personal movable property. Personal movable property excludes only 6 items. So only those 6 items are capital assets. Car is not a capital asset. Mobile phone is not a capital asset. iPhone is not a capital asset. Cycle is not a capital asset. Furniture is also not a capital asset. Okay, easy points. So what is the answer? No capital gain will be computed since it was not a capital asset. Understanding or not? Easy points. Now also I did not give the answer, so check this. 116. Mr. Mehak received cash gift of how much? On his marriage, and 1 lakh rupees from his relative on his birthday. Check this, birthday. Calculate the amount taxable in the hands of Mr. Mehak. Can you tell me? 1 lakh. బర్త్డే కదరా. Don't combine those two. Whenever you have received the gift from your relative, that is always exempted. Whoever the person who have gifted on your marriage, that is also. So don't combine both. Both you have to read them independently. This is Mr. Okay, Sneha, Mr. Okay, Kavya, Mr. So next one. This you don't know now. So check this one. Oh, this also you won't know now. This is the most important question I want you to solve. Okay? Everyone open their calculators. I want only the right answers. Mr. Pratik, 48 years and resident in India. Oh, option highlight this. And resident in India has a total income of how much? 6 lakh 50. 6 crore 50 lakhs. I have intentionally highlighted the answers from some questions. I hope you already know that point. Okay, so Gurri Mohalna ee answer cheppi Gurri lavukandi. So think carefully, think wisely. Okay, so check this. Total income is how much? 6 crore 50 lakh. Long term capital gain is how much? 55 lakh. They have only given the tax rate. So don't apply your brains. On or after 23rd July, ఎందుకురా మీకు వాడు ఇచ్చిన ట్యాక్స్ రేట్ అప్లై చేయండి. Taxable at 20%. How much it is? 55 lakh. Short term capital gain 15%, 111A 65 lakh. Other income is 5 crore 30 lakh. 5 crore 30 lakh. First let us write the amounts. Long term capital gain under section 112. How much it is? 65 lakh anta. 6 crore anta. 6 crore anta. 55 lakh. ఇప్పుడు నువ్వు ఆన్సర్ చెప్పకపోతే కూర్చోబెడతాను మొత్తం 1 MCQs అయ్యేదాకా. ఎస్టీసీజీ అండర్ సెక్షన్ 111A ఎంతమ్మా? 65 lakh. సూపర్. అదర్ ఇన్కమ్ ఈజ్ హౌ మచ్? వాడే ఇచ్చాడు, కంగారు పడకండి. 5 crore 30 lakhs. Tax rates also they have only given, so I am making it very easier for you. Long term capital gains, it is how much? 20%. Short term capital gains, how much it is? 15%. Other incomes, normal tax rates. So if you are toppers, I want this answer correct. So try the calculations. You have to calculate the tax liability, Chiranjeevi. I want first answer from you only because you are the most talented person in the class. So do fastly. Don't forget we have something called surcharge. You have to calculate optional tax regime. Optional tax regime. Optional tax regime. Optional tax regime. See. 5 crore 30 lakh is other income. 65 lakh is short term capital gain under section 111A. And long term capital gain under section 112 is 55 lakh. See, you can refer to previous notes also, basics, if you have any doubts. $50 lakhs. Okay. First I want the answers, then we will compare with MCQs. They have only given 4 options, but I will definitely get 1, 2, 3, 4, 5, 6, 7, 8, 12, 16, 19, 23, 24. At least 8 MCQs I will get. 8 options I will get. If everyone is honestly calculating, I will easily get 8 MCQs, 8 options. Tell me, Chiranjeevi, what is your answer? Huh? 6 lakh? 1 minute is the answer. Any person who have done it fastly? Surcharge. Have you remembered there is something called surcharge? Last we have to add health and education cess also. Have you remembered this? Fine. Six lakh. Crores lo vachinda correct. Tell me. 2 crore 30 lakh 87,000. Health and education cess add chesav. Next option Chiranjeevi. Fast గా చెప్పాలి. Time waste second. Sudarshan వచ్చిందా? Funny, you can check basics also if you want. Check surcharge carefully, you will get the answer. I have already given the hint also. Ah, 2 crore 15 lakh 1041 అంతేనా? నెక్స్ట్ సూర్య, నువ్వు నీ దాంట్లో చేయకుండా వాడి దాంట్లో చూస్తావు. నువ్వు మూసుకొని చెప్పు ఆన్సర్ ఎంతో. ఎంతరా యశ్వంత్? 22 లాకా? ఒరే వాడు ఇన్కమే 6 crore కూడా దాటలేదు, 22 crore అంటాడు. 2 crore 23 lakh 57. నీకెంతరా? 630. నెక్స్ట్ 23 lakh. మరి 23 lakh అంటావు కదా దరిద్రుడా. 2 crore 39 lakh 30. ఈడు సరిగ్గా చెప్పడు. నెక్స్ట్ సుదర్శన్ ఆన్సర్. సరే విల్ డూ వన్ థింగ్. నవ్ విల్ చెక్ ద ఆప్షన్స్. ఫ్రమ్ ఆప్షన్స్ వెదర్ యూ విల్ క్యాలిక్యులేట్ ద ఆన్సర్ ఆర్ నాట్. లెట్ us check. Okay, I think Kavya got the right answer, so check. Have anyone got the right answer? First of all, B is not the correct answer. If you have any doubts, B is not the correct answer, that is for sure. So check the other 3 options. Have anyone got the 3 options? 10 lakh. ఏ ఆప్షన్? ఫస్ట్ ఆప్షనా? అదే వాడికి వచ్చిన దానికి ఇక్కడ దానికి 10 lakhs డిఫరెన్స్ అంటున్నాడు. ఫస్ట్ ఆ ముస్ట్ ఆన్సర్ ఏమొచ్చింది వాడికి? 23944 వచ్చింది. మళ్ళీ అదేంటి? ఒరే నువ్వు 39,440 అని ఇందాక ఏదో చెప్పావు, 44,000 అని. నువ్వు చెప్తే రాస్తాడు కానీ నువ్వు చెప్పుడు నేను అసలు ఎవడరాడు? Copy this. Okay, check this. Very important MCQ. Okay, Sneha. For MCQ, you have to spend only more than 2 minutes. It is not worth. If it is taking more than 2 minutes, which means you have to stop and you have to move to next questions. Okay, fine. So check this. Easy question, but still. First one. LTCG under 112. Can you calculate the tax amount for me? Super. STCG under 111A. 5 lakh. నాదే తప్పింది అడగడం. ఫస్ట్ వన్ కూడా రాంగ్. ఇదంతా 9 lakh. ఒరే ఇందాక చెప్పిన వాల్యూ ఎవరు చెప్పాడు? మరి ఇందాక 9,70,000 చెప్పాడు. ఫస్ట్ గేదెలో నువ్వే అరుస్తావు. అవునా? $5 crore 30 lakhs. What is the tax liability? Up to 2,50,000 nil. More than 2.5 up to 5 lakh. 12,500. More than 5 lakh up to 10 lakh. 1 lakh. Super. More than 10 lakh entundra. 520 lakhs. Antena? Into 30%. How much? Tell me fast. 1 crore 56 lakh. Super. Tell me the total. 157 అంతేనా 15712 550 అంతే కదా బట్ surcharge also you have to add, correct or not? What is the total income? More than 5 crores. So the surcharge is 37%, which means what? You have to add 37% to this also, to this also. But maximum surcharge applicable for special incomes. LTCG under 112A, STCG under 111A, ఇంకోటి ఏంటి LTCG under 112 and dividend income. For these 4 incomes, what is the maximum rate of surcharge? 15%. Which means, can you add these 2 amounts? But for these incomes, surcharge is how much? Tell me 15% of this. 15712 plus here the surcharge is 37% because the other income is more than 5 crore. Other income is more than 5 crore. So tell me. 581,625. Is it correct? So please add these two figures also. First tell me this. 23,86,250. Tell me these two also. 2152. 2152. 215261. అదిగో 26 అంట 26 మళ్ళీ 25 అన్నాడు ఈడు చెప్పడు మళ్ళీ ఓవర్ యాక్షన్. యాడ్ దీస్ టూ 9 lakh 2 crore 12,000 completed or not? Health and education says how much? So please add 4%. 2 crore 48 lakh 68,000 870 870. So the answer is B only. So the answer is B only. Okay, so check this. Very, very important. This question may straight away come in your exam also. So be carefully prepared for this. Okay, so be very careful. So balance MCQs. No only. Okay. Okay, so the next chapter which we'll cover is this written off income. If you check this in the written off income chapter, maximum concepts which they're going to test is basically this due date for filing of written off income only, which is very, very simple. So if you want me to summarize the due date, let me just explain you. This is very simple. The due date is, in normal cases, the due date is 31st July of assessment year. Whereas if you are covered in, if you are a cap SSC, which means if you are a company or if you are a person who is required to get your books of accounts audited, or if you are partner of such partnership firm who is required to get audited. If you are covered in these three persons, for you the due date of filing of return of income is 31st October of assessment year. However, for you, if transfer pricing provisions are applicable, for you the due date is 30th November of assessment year. It is pretty simple. If you are a normal SSE, for you the return of income due date is 31st July. If you are covered in cap SSE, which means if you are a company, if you are an audit party, or if you are a partner of a partnership firm whose books of accounts are required to get audited, for you the due date is 31st October of assessment year. For you, if transfer pricing provisions are applicable, then the due date is 30th November of assessment year. Majority of the concepts they are testing from this concept only. So let's quickly check this point. If you check the first MCQ, they are saying Mr. Radhe is a working and Mr. Shyam is a non-working partner of Miss Sunshine Partnership Firm. They are saying this partnership firm is required to get their books of accounts tax audited, which means it is clearly an audit party under section 44 AB. What is the due date for filing the return of income of Mr. Radhe and Mr. Shyam? Which means what? They are asking the due date for those partners of the partnership firm who is required to get their books of accounts audited. Which means if you check this point, it is covered in this part. Hence the due date is 31st October of assessment year for both the persons. Therefore, the due date is 31st October 2025 for both Mr. Radhe and Mr. Shyam. Okay, so next one, a return of income for the assessment year filed within the due date specified in section 139 subsection 1 can be revised, which means they are asking the time limit to file the revised return. If you check this, the time limit for filing the revised return is pretty simple. It is nothing but 31st December of assessment year. It is nothing but 31st December of assessment year, which means it is 3 months before the end of the assessment year, which means it is clearly the assessment year will ends on 31st March. So 3 months before means 31st December of the assessment year. Therefore, the due date is 31st December 2025. If you check the next one, the same point they will say, if the return of income is filed under 139 subsection 4, the SSE can revise the return on or before. This is also same, they are asking the time limit for revised return. Even the return is filed under section 139 subsection 1, which means original return, or even it is a belated return or a loss return, in all the cases, the time limit for filing of revised return is only 31st December 2025. You have to remember the time limit for filing of revised return is 31st December of assessment year. If you check the next thing, not only for revised return, the time limit even for belated income tax return is also nothing but 31st December of the assessment year. So if you check this part as well, the time limit for filing the revised return is clearly given as 31st December 2025. So if you check the next part, they are saying which of the following can be corrected while processing the return of income under section 143 subsection 1. If you check this 143 subsection 1, this is nothing but processing of return, and they will also call this section as summary assessment as well. So if you check this, they will say that if any arithmetical errors in the returns are finalized and they are identified, the same will be corrected while processing the return of income, and they will be highlighted, and an intimation will be sent to the SSE regarding this, and the SSE have to take appropriate action. So after this, the most important section 156 clearly says about tax demand, which means what? Notice under section 156 can be given if the tax should be payable by the SSE. In this case, tax will be demanded from the SSE based on this section, which is 156. The next one, income escaping assessment. This is covered in which section? 147. If you check this, we have totally 3 types of assessments. One is 143 subsection 3. In this section, they will cover about scrutiny assessment. After this, they have covered section 144. In this, they will cover about best judgment assessment. This is also very, very important. And the last section is section 147. Here they will cover about income escaping assessment. So these are the three types of assessments as per income tax. But you will learn more about these assessments at CMA final level. But at now you just need to remember the section numbers which are going to cover all the types of assessments. It is very simple. Scrutiny assessment is covered in 143 subsection 3. Best judgment assessment is covered in 144. And the last one, income escaping assessment, is covered in section 147. So set off or carry forward we have already covered. 6A deductions are also already done. After this, the most important is the concept of TDS or TCS. So if you check this, some of the most important sections which you should not miss during this TDS according to me is, let me just highlight those. So you have to revise them. If you check this, the most important sections which a student should not miss is this 193 he have to go through, and 194 as well, the limits you have to check, and the rate of TDS also, and the exemptions where TDS is not applicable. So all these points you have to check. 194A, very, very important. Interest also you should not miss. After this, you have to go through this 194B, which is relating to winnings, and BA is normal. You can just check this. 194C, most important. D also you should not miss. E, super important. This is the TDS which you have to deduct if you are making payment to a non-resident sports person or sports association or a non-citizen entertainer. This is also very, very important section. The TDS which you have to deduct is 20% tax plus 4% health and education cess also. Since the person is non-resident, it is the responsibility of the payer to make the entire payment, to deduct the entire tax amount while making such payment. Therefore, health and education cess also will be added if the payment is made during this section. After this, 194G is also covered, very, very important. H, super important. I also you have to keep double stars, rent. IA, important. IB also you have to go through. J, again a very important section. 194M, N, O, P, Q. All these are new sections which you should not miss. M, N, O, P, Q. After this 194R is also recent section. This is also very, very important. After that, at least you have to solve these sections. After this, you have to move to TCS concept, wherein you have to understand the most important is this one. This one, if you have purchased any motor vehicle whose value is more than 10 lakhs, TCS at the rate 1% would be applicable during that section. So which you should not miss that. And after this, if you have received any overseas remittance or if you have sold any overseas tour package, during this also the seller should collect additional amount of TCS at the rate 5% or 20%, whichever is applicable. That also I am not covering now. We have already covered in depth in our regular class. So this time only for solving MCQs, what all are relevant, I have tried to cover those concepts. So if you check this, this is the most important. It is the responsibility of the employer to deduct TDS while making salary payment to employee. So while calculating the total income of that employee, if the employee is having house property losses, the same can be adjusted while calculating the total income, and hence that will be reflected while deducting the TDS amount. But other losses, if you check this, business losses, long-term capital losses and these short-term capital losses will not be deducted while calculating the total income. So this point you have to remember. Only what will be considered by the employer, only the loss from house property will be considered by the employer while deducting TDS amount on salary paid to the employees. If you check this one, just now we have covered this. It is section 194E. If you check this, if the payment is made to non-resident sports person, the rate of TDS is 20%, but along with TDS, you have to deduct the 4% health and education cess as well, which comes to 20.8%. So this is also most important section. After this, a brokerage they are asking, this is covered in 194H. The limit is 15,000. So if the payment is in excess of 15,000, then TDS at the rate 5% would be applicable in this section. After that, the most important section is 194I, which is related to rental income. So here, if the payer is making rent payments to the payee, and if the aggregate of payment is exceeding 2,40,000, then it is the responsibility of the tenant, to deduct the TDS amount while making payment to the payee. This is also most important section. After this is little bit different question, so you just have to remember this. What they are saying is, if any person fails to file the statement of TDS or TCS on or before the due dates prescribed in this regard, then a penalty of 1 lakh rupees would be applicable, but the maximum amount is the amount of TDS or TCS, which means what? The maximum amount of TDS or TCS is the applicable thing, which is very, very simple. So after TDS, TCS is completed, let's quickly jump into this advanced tax. This is also very easier section. So if you check this part, it will be completed very easily. A senior citizen is there who is having a total income consisting of pension and let out property income aggregating to 6 lakh must have paid advance tax during the financial year. If you check this, there are two persons who are exempted from paying advance tax. The first person is, if your advance tax liability is less than 10,000 rupees, then you should not require to pay any advance tax. Or otherwise, if you are a senior citizen plus you are not having PGBP income, then also you are not required to pay any advance tax. If you check the question is clearly saying the person is a senior citizen plus he is having pension income and house property income, which means what? He is not having PGBP also, which means the person is not required to pay any advance tax in the financial year 24-25, which is very simple. So the next one, the provisions relating to interest on delay in payment of refund are given in which section? Those are given in 244A. If you check this, 234A and 234B will talks about interest on late payments of advance tax, or I can say this as deferment of advance tax installments. This 234A is for filing of late return. But if you check this, the provisions related to refund related things are given in which section? 244A. This is also very, very simple. So the next one, an individual estimates that he is required to pay 1 lakh rupees as advance tax by 15th of December, which means it is clearly third installment. So by third installment, you are required to pay 75% of advance tax. If you remember, the first installment you have to pay 15% of advance tax. By second installment, you have to pay 45% of advance tax, and by third installment, you have to pay 75% of advance tax. So that in this case, the third installment is 75,000, which is correct. So these residential status MCQs have repeated, so you can easily ignore these points. So after this, we are left only with this clubbing of income and agricultural income. If you check clubbing of income fastly, income from asset transferred to spouse will be taxable in the hands of the transferor if they are transferred only for inadequate consideration. Always remember, if the asset is transferred for adequate consideration, there are no clubbing provisions which are applicable. Even if the asset is transferred in pursuance of an agreement to live apart, even in this case also clubbing is not applicable because it is clearly covered in the exception. Also, they will say that the marriage relation should subsist at the time of earning income also and at the time of transfer also, which means what? If the asset is transferred before marriage, in this case also clubbing provisions would not be applicable. So the correct answer in this case will be, if the asset is transferred for inadequate consideration, in this case clubbing provisions would be applicable. After this, Mr. Sunil's minor daughter have earned 50,000 rupees income from her special talent. We already know that if minor child earns any income, that should be clubbed in the hands of parents whose income is higher. But there are three incomes which you should not club even if the income is earned by the minor child. First one is, if minor child have earned that income due to special talent or special skill or manual work, or if the minor child is having any disability specified in section 80U. In these three cases, whatever the income the minor child is earning, the same should not be clubbed. In all other cases, whatever the income which the minor child have earned, that should be clubbed in the hands of both the parents whose income is higher. But in this case, since the income is earned because of the special talent, clubbing provisions would not be applicable in this situation, which is very, very simple. So the next part, last topic which we are having is this agricultural income. If you check this, simple T, there are specific rules which will guide you to bifurcate the agricultural income and the business income. If you check, we have tea there, coffee there, we have rubber also. You have to remember these three percentages, which will give you a clear-cut idea as to how much of your income is agricultural income and how much of your income is business income. If you check this, his total income is 10 lakh rupees. If you remember the rule, for tea, 60% would be agricultural income and 40% would be business income. For coffee also it is for rubber it is 65%, 35%. For coffee we are having grounded, cured, roasted and grounded. That 4 processes will be there. If the processes are 4, then your agricultural income, if the processes are only 2, then your agricultural income will be 75-25. If the processes are 4, your agricultural income will be reduced and it will be 40%, which is also very, very simple. If you want, I can explain once again. So 60-40, if the processes are less, it will come to 75-25. If the processes are more, if the processes are less, agricultural income is more, which means this. If the processes are more, agricultural income will be less, which means 60-40. The last one for rubber, the income is 65%, 35%. So here they have given it as a T. Therefore, 60% is the agricultural income which is applicable in this case. The next one. Which of the following is an agricultural income under the Income Tax Act 1961? If you check this, if the partnership firm is fully engaged in agricultural operations, whatever the remuneration or interest on capital received by the partner from such firm is also clearly treated as agricultural income, but the same provisions are not applicable for the dividend earned or the interest received from any money lender as well. So you can easily remember like this. If the partnership firm is fully engaged in agricultural operations, whatever the income which the firm has earned, if it is fully agricultural income only, if any remuneration or interest paid by the partnership firm to the partner will also be treated as agricultural income only, and all the exemptions related to this agricultural income will be applicable even to that partner as well. So if you check this, this is also done. After this, they have clearly given he is engaged in the business of growing and manufacturing of rubber. So if you check this, rubber 65%, 35% is the ratio which you have to remember. Higher will always be the agricultural income. So here they are asking about agricultural income, which means if you multiply 2,50,000 multiplied by 65%, you will easily get this 1,62,500, which is the correct answer. So after this, we have, as per the Income Tax Act 1961, income from saplings also will be considered as a agricultural income. This is clearly defined in the definition of the agriculture and also many case laws which are in support of this the decision. So the thing is, if you have any saplings and if you have received any income from such, that will be considered as an agricultural income, which is clearly easy. So after this, this is the most important MCQ according to me. Here what they are saying is, there is Mr. Naeem who is having business operating in SEZ started 3 years ago. This is an exemption related to 10AA. If you check this, this is applicable to SEZ, which is Special Economic Zone. What you have to remember for exam is, for the first 5 assessment years, 100% of export profit is exempted. For the first 5 assessment years, whatever the export profit which you have calculated, that will be exempted. And for the next 5 assessment years, 50% of export profit will be exempted. And for another 5 years, The exemption amount is pretty simple. 50% of export profit or amount transferred to cess reserve, whichever is lower, would be exempted. If you check the question, they are saying it is started 3 years ago only, which means what? We are still in the first 5 assessment years only. Therefore, how much is exempted? 100% of export profit would be exempted, not the entire income. Export profit of the cess is only exempted. If you check this, your PGBP income is 12 lakh rupees, which means if you check this calculation, the PGBP income is 12 lakh, but this entire income is not exempted. How much is related to exports? That is only exempted. So if you check this, it is 12 lakh multiplied by 50 lakh divided by 120 lakh. If you check this, the answer is pretty simple. You will get 5 lakh as the answer, and 100% is exempted because we are there in the first 5 assessment years only. Therefore, the answer is 5 lakh rupees. So the next one, this is most important. If you check this, the total income of Miss Vaishnavi is 3 lakh rupees, but she had incurred cash deposits in her savings account of 49 lakh, incurred foreign travel expenses of 1,99,500, electricity expenses of 98,500. What are her consequences with respect to filing of return? This question is specifically related to those persons who are mandatorily required to file their income tax return. If you check this, the first point which they will say is every company or partnership firm is mandatorily required to file their income tax return. Other than this, if you are covered under any other SSC, you are required to file return of income if your income is exceeding the basic exemption limit. If you check, the basic exemption limit is how much? 2,50,000, because they are talking about optional tax regime. Actually, the word is missing. They are saying about optional tax regime. So since it is in excess of basic exemption limit, even if you don't check the other conditions, still you can easily understand she is mandatorily required to file the return of income, because the government have already notified few persons, even though their income is not exceeding 50 lakh, even though if the income is not exceeding the basic exemption limit, if the savings account deposits are 50 lakh or more, if foreign travel expense is 2 lakh or more, if electricity expense is more than 1 lakh, if foreign travel expense is also more than 2 lakh, if electricity expense is also more than 1 lakh, then they have to file the return of income. But if the income itself is exceeding the basic exemption limit, there is no point in checking all these points, which means what? Clearly again they are saying that since the total income of such person is exceeding the basic exemption limit, she is mandatorily required to file the return of income without checking for all the additional conditions. So the next one is TDS is not required to be deducted under section 194A. This is applicable for interest other than interest on securities. But if you check the limit, if the payer is the banker, the limit is 40,000 in case of normal citizen. If the person is a senior citizen, then the amount will be increased to 50,000. But if any type of payment other than these two are covered, for you the limit will be 5,000 and not 50,000 or 40,000. Any other case, the interest limit is only 5,000. So the next one, if you check this, what is the due date for filing the return of income in case of a company who is required to furnish a report form 3CEB under section 92E? This is specifically relating to transfer pricing. So just now I have explained you the due date for which, due date of an SSC for which transfer pricing provisions are applicable. If you check this, the due date would be November 30th of the assessment year. So if you check this, okay, so the next one is, during the previous year 24-25, Mr. Sambit, a resident in India, has made the contribution to PPF of how much? 1,50,000 unpaid insurance premium on the life of the spouse, where policy taken on 1/4/18. Okay, they have given 25,000. Issued value is 2,20,000. What is the deduction allowable if he has exercised the option of shifting out of the default tax regime? Okay, fine. They are clearly saying he is shifting out of default, which means he is following optional tax regime. So if you check this, this is covered in 80C, 1,50,000. This insurance premium on the life is also covered under ATC. This they have paid some 25,000, but we have already know that the maximum deduction of ATC is how much? 1,50,000. So even though if you have made the extra contribution, that is not necessary because the maximum contribution itself is only 1,50,000. So even if you have paid more amount than this, for you the maximum amount of deduction will be only 1,50,000, which is pretty simple. So the next one, on 1st Jan 2024, Mr. Rohit have made 3 fixed deposits of 3 lakh rupees each for 9 months. Here it is clear that they are having 3 lakh rupees each, 3 fixed deposits. 3 fixed deposits. So if you check this, they have given 3 lakh rupees of 3 fixed deposits and the rate of interest is 9% with MG Road and Park Street and Central branches, okay, which was adopted core banking system. If you check this, if the banks are having core banking system, you have to check the interest limit per bank wise, not branch wise, which means what, for you the limit would be only 40,000 rupees. Here they are not saying anything about senior citizen, therefore the limit is 40,000 rupees only. If you check this, let us just calculate the interest amount. They are saying the fixed deposits are going to mature on 28th February. We are currently there at 1st June. So if you calculate the number of months, we are having only 8 months divided by 12 multiplied by 9%. So the answer will comes to 60,750. But if you check the TDS rate, it is clearly 10%, because of which the TDS rate would be 6,075, and here you have to check the reason as well, as the interest is aggregated across all the branches. Since the interest have exceeded 40,000 rupees, you have to deduct TDS at the rate 10%, which is easiest question. So this is also related to PGBP section 35, which is related to scientific research. If you check this, all expenses, whether revenue or capital, everything will be allowed as deduction if the same are incurred after the commencement of business, except one capital expenditure, which is land. If you check this, this is land, so which is not allowed, and building 12 lakh is allowed, other capital expenditure 8 lakh is also allowed, and the revenue expenditure of 5 lakh is also allowed, which means what, if you add this 12 plus 5 plus 8, the answer comes to 25 lakh, which means what, you have to check, other than the cost of land, whatever the expenses, whether revenue or capital, the same have incurred by the SSE, everything would be allowed as deduction. Everything would be allowed as deduction. So next one, share of profit. Always remember, share of profit means what? After earning the partnership, after earning income from the partnership firm, it will first pay the taxes, and whatever the income which is left with the firm after paying taxes, the firm will distribute the same to the partners. So whatever the income, that is called as share of profit. Since the partnership firm have already paid the taxes on such income, partners are not liable to pay any tax on that, and therefore it is clearly exempted from tax. Therefore it is clearly exempted from tax. Always remember, share of profit is clearly exempted because the partnership firm have already paid the complete taxes on that. So the next one, Mr. X incurred a loss of 90,000 rupees for owning and maintaining race horses and received rent from land of 1,30,000. This is covered in adjustment, which we have detailedly explained in the Super 35 questions along with concepts as well, which means what? Loss from owning and maintaining race horses can be set off only against profits from owning and maintaining of race horses, which means it cannot be set off against other incomes, which means whatever the other income which we are having, against that you cannot set off this loss from owning and maintaining of race horses, which means these can be clearly carried forward. So if you check this, the income from other sources will be clearly 1,30,000 because setting off is not possible, and whatever the loss which we have here, that can be carried forward to the next year. If you check this, an SSE has incurred preliminary expenses of 20,000 rupees in the month of April 2023. His business started in the month of May 2023, and what is the amount of deduction allowed? This is also very simple. Preliminary expenses, the amount of deduction would be 5%. Okay, they have not given like this. Okay, it is pretty simple. So you just have to multiply 20,000 into 1 by 5, which is clearly 4,000. Therefore, the answer is 1/5 of installment would be allowed as deduction for the preliminary expenses, which is clearly covered in this section 35D. If you check this question, this is also pretty simple. Opening WDV, they have given 20 lakh rupees plus additions during the previous year, purchase it and put to use from same date. This is clearly purchased on 1/1/2025, which means it is put to use for less than 180 days during the current previous year. Therefore, you will not get full depreciation. You will only get half of the depreciation. They are saying another asset is also purchased, which is purchased on 31st August 2024. Okay, so this also is more than or equal to 180 days. So you will get full rate of depreciation for this. And they are saying another asset is sold for 2 lakh rupees. Okay, so first it is pretty simple. Opening WDV is clearly 20 lakh rupees plus additions 4 lakh and 1 lakh. And minus we are having this 2 lakh rupees. So if you add all these figures, 24, 25, 23 lakh will be the closing WDV. And this you have to separate into 4 lakh, where you will be given half of the depreciation, and the balancing figure 19 lakh you will get the full depreciation. If you just multiply into 15% into 50%, and here if you multiply 15%, here you will get full depreciation. Whereas here you will only get 50% depreciation. So if you multiply these two figures, so if you check this, the right answer is you have to calculate 19 lakh into 15%, which means 2,85,000 here you will get, plus you also have to add this 4 lakh multiplied by 15% into 50%, which will again comes to 30,000. So the total, if you add those two figures, you will get 3,15,000, which is very easier thing. So the next one, when the SSA is having losses from house property, the amount of loss that can be set off against other incomes in case of default tax regime is, always remember, if the SSA is having losses from house property, he can set off against any other head to the maximum extent of 2 lakh rupees, but that is only applicable if the SSA is following optional tax regime. Since he is following default tax regime, set off cannot be permitted. Not only set off, even carrying forward is also not eligible for the SSC. So this is pretty simple. Next one, this is similar MCQ which we have already seen this. While computing the TDS on salary paid, the losses given below would be considered by the employer, which will be considered only house property losses will be considered and other losses would not be considered. If you check the last point, when a motor car is sold for 12 lakh by a dealer to a buyer holding the PAN, the amount of TCS applicable should be. I have already explained it very clearly. If you are buying a car, if the car value is more than 10 lakh rupees, TCS rate would be applicable at the rate 1% on the total value, and hence the TCS amount is very simple. It is 1%, which means 12,000. So I think we have covered all the maximum MCQs.